All right, ladies and gentlemen, welcome to the SOFI Q3 earnings breakdown. Today with me is the only person that arrived on time.
That's right.
With the guy who arrives on time, by the way, Tanner. That's who I am. Actually, Chris was here before me. Chris, what are we expecting, brother?
I'm expecting good things. I definitely think we're getting a triple beat, right? So I don't remember what I guess we should probably review real quick what Wall Street's expecting, the most recent ones. I know when I wrote my article, it was 888 on revenue. It's a little higher than that now. Did you see the PayPal news? I guess we can talk about that for a second.
What's the PayPal news?
So they're the first integration with ChatGPT. So they're going to be embedded inside of ChatGPT. The stock's up like, I don't know, over double digits this morning when I saw it.
14%.
You guys are saying, hey, you didn't see it. I just woke up.
Oh,
it's up 10%, 77.50.
And SOFI just ran for no reason up to 4.4%.
Yeah. SOFI's at 31.33. I bought yesterday at $31. So
good job.
We're
I actually
strong.
Finished out. I wanted to round up to the next nearest 100 shares. So I actually bought yesterday too, but during normal hours.
Tanner slept in. It's 6:55, guys. We're on time. I don't think Steve's going to be here. He's going to sleep.
I thought that on your show last night, the Tech Bros, that Amit said that him and Steve were going to be live like at the normal time for them. So in like a half hour.
Oh, did he not schedule? Oh, maybe he didn't schedule with us. Oh, all right. Well, we'll do the, maybe it was a little too early.
So it looks like expectations have moved. The expectations for revenue is 895. So that's what we're looking to beat there. For EBITDA is 262. And then EPS, I think, is still 9 cents. It used to be 8 cents. Yeah, 9 cents. And those are the mean numbers, not the median numbers.
Yeah. The 9 cents is pretty exciting. Makes it harder to beat, obviously, to see the price go up. But I think it adds to our, it's not all about beating. It's about how much growth.
It's about the fundamentals at the end of the day.
Yeah. So very happy that that Wall Street's starting to catch on, even though I think my hope is that we're still going to blow them away. And if somebody knows something in the pre-market, we are up 4.2% after a day being up 3.4%.
I mean, they usually do that though. They run up.
Yeah, SoFi always runs. Like people get excited right up until they get released.
You guys like
you say SoFi always does that, but SoFi always triple beats. So
yep, there you go. Oh, did you get that made yourself, or did somebody send it to you?
That's a Canva product right there.
I made it. Yeah, it's a Canva product. 45 and 25, baby.
Called that.
Yeah.
Remember when people were calling me crazy for calling for 25 and 25?
Now we're going to blow through
April. Sorry.
We're going to blow through 25 and 25.
Yeah.
Yep.
Ladies and gentlemen, thank you all for being here with us today. It's an early morning, especially for a lot of you on the East Coast. But,
You mean the West Coast?
Yep. Thank you. I only think about myself.
I get it.
No, on the West Coast. But it's really early morning for me. On the other hand, we hopefully are going to see some very exciting news, celebrate together. This is a game that we all get to win in if it all goes well. We also lose. We lose all together as well. If things go wrong, let's hope that's not the case. We are going to see earnings in 1 minute. Both Chris, Tevis, and myself, people on X, you guys in the chat, we're going to be scrubbing for these earnings, hitting refresh too often.
And Roy will be here. He said he was caught up in his commute this morning, but he'll be here soon, I assume.
Yeah. No crying in the casino.
Oh.
That's not what you want to hear a couple seconds before earnings.
So big red candle. Well, not big red candle, but a red candle. It's basically even now. I don't see any numbers yet.
SoFi going from 31.48, hitting 29.41. Little jitters, eh?
Yeah.
Starting to recover. I don't know if they know anything. We're back above 2%. Whoever bought that dip, congrats. Little early morning jitters.
I don't see anything yet. We'll check.
Oh,
X.
it's out. It's out. 949 revenue, 11 cents EPS, double beat.
That's exactly what I said. I said 950 and 11.
How many members?
Let's
I don't
see.
know.
I still don't see it.
How many members? Oh, he's just getting the
Probably just the top line numbers.
yeah.
Somebody got it on Bloomberg terminal.
Okay, so that's the initial reaction. Then they
Yeah,
did have numbers.
949.6. So like I was only a couple $100,000 off on the revenue.
Yeah, EPS beat by 22%, revenue beat by 6%. EPS is up 120% year over year, and revenue is up 38% year over year. And honestly, those are really, really good really good numbers. I think the $1 billion quarter type expectations was a little like I think we all saw that we were sort of setting ourselves up for really high expectations. The full numbers are out.
All right, here's the earnings presentation.
Oh, we also have Roy. Roy, welcome,
All right.
brother.
So,
Morning, guys.
adjusted net revenue up 38% to a record 950 million. Adjusted EBITDA up 49% to a record 277 million. Fee-based revenue up to 409. Member growth. Let's see. Where's the members?
No members. No talk of members early on makes me think we did not hit 1 million.
905. I don't know how much that is in terms of. So it's up 905 net.
Okay. Let's see.
950 million. I already said that. Sorry.
905. The downloads have deceived us.
Yes, they have.
905.
Rule of 40 of 67.
Is that not net, by the way?
I think that's net. So I don't know.
Okay.
We'd have to look.
Look at this growth rate, by the way. They've just been holding up this 7.6 to 7.8% these last couple of quarters. Under 35% year over year, and just continuously trucking going forward. Oh my gosh. Okay, wait. I'm already in guidance. Let me go back. Let me go to the start. We got our member number. Let's go back to the start. So adjusted net revenue up 38% year over year. Adjusted EBITDA of a 29% margin. Net income of 140 million, 14% margin. 8 straight quarter of profitability. We knew that. Record adjusted EPS of 11 cents. Wall Street guided, well, for 8 cents, but actually 9 right at the right before earnings started. Fee-based revenue up 50% year over year, representing 43% of adjusted net revenue. Loan originations of 9.9 billion. You couldn't have found $100 million more just to say that you did a $10 billion quarter?
They got to leave something for Q4.
Huge deposit growth, 3.4 billion. Personal loan charge-offs declined by 23 basis points, and tangible book value grew by 1.9 billion. That's also huge. Is that the dilution that's causing that? 7.2 billion is tangible book value now.
Yeah, it would have been, because that would go to your tangible book values, the amount that you raised. It wouldn't, but is it tangible book value per share or just overall that they were talking about? Sorry, I'm looking
Overall.
So yeah, it would have gone up because they raised.
12.6 million members, 18.5. Okay, wait, there definitely is a lot of cross-sell this quarter because that's a much faster growth rate.
Yeah, they've been pushing a lot of marketing at us members.
But that's great. That's honestly kind of the one piece that I was looking for that they haven't done. I want to see the cross sell accelerate because they've got a bunch of members now, right? And now it's important that they start to monetize them and get the app to be stickier. So I love that.
Adjusted net revenue. Okay, sorry, we saw all this. We're at a fee-based revenue annualized run rate of 1.6 billion now. I mean, obviously, they're just timesing it by 4, but it's going to be a lot higher than that.
It's crazy that they're at the equivalent revenue that they were full year last year. And it's just been 3 quarters.
We got a rule of 40 slide.
Fee-based
Finally.
revenue now 43%. Wow.
Not many banks do this. Well, SoFi is a bank. They don't want to be looked at as just a bank. Rule of 40. Adjusted net revenue with adjusted EBITDA margin of 29%, leading us to 67 rule of 40. 67% total. Anything else you guys are noticing in the earnings?
The guidance, 37 cents for full year.
I'm telling you, man, we're going to see 38 cents.
At least.
Maybe 40. Yeah. No, these look really good. We were maybe a little bit bullish. I hate that PayPal and SoFi are covering at the same time. One interesting thing from PayPal, and we'll go back to SoFi, dividend. They just announced it.
Nice.
I'm reading that. It's crazy.
Nice. Up to 79.84. They needed that, man.
And OpenAI partnership too. But yeah.
You're late to that. We covered that already.
Okay, yeah. Long commute this morning, so sorry.
But diluted EPS of 37 cents, I think, shows that the dilution was not meaningfully impactful to how much they can actually grow by. You know, that this is not only growing by an additional amount of what they diluted, but they're accelerating growth. This is on a per share basis. So every share that they diluted, they have to do even more from, the capital that they raised from the dilution. So 37 cents is a big difference from 31, especially considering you only beat this quarter by 3 cents, and they raised it by 6. So if next quarter comes out with a similar beat, I mean, Tim Sweeney could be right. We could hit a 40-cent quarter, or it'll be, 38 cents or something like this, depending on if they focus on growth. What do we think about this guidance now? Annualized growth rate of 36%, adjusted EBITDA margin of 29%. What do you guys think?
So let's see. I'm trying to go through and see what that actually means for Q4, right? Like what they're guiding for Q4.
Yeah, if you have that broken down, that would be great.
Yeah, I'll get it in a second.
While you're pulling that up, I wouldn't say a 3-cent EPS beat is an only. Like when you're talking about 8 versus 11, that's a big difference. Shouldn't surprise us that SoFi beats, but
no. I'm saying that they raised it by 6 cents. So I'm not saying only that's a big deal, but they raised it by double the amount that they beat by. So only 50% of that is because of this beat. The other 50% they're pushing out to Q4. And then
so it's only 961 for the next quarter is what the revenue guide is, which is that's typically what they do, right? They guide for either flat to very slightly up, and that ends up beating the Wall Street estimates because they're so because Wall Street estimates are usually pretty darn low.
Loan growth of single digit. Oh, okay, wait, sorry. Member growth of at least 3.5 million, approximately 34% from 2024 levels. I think they raised that. I think it was 3.3 before, no?
Tech platform's down again, hey, in terms of members?
Yeah, I think I called it. I think it's Robinhood.
158. Yeah, it would make sense for it to be Robinhood with how aggressive they've been.
Yeah. No, I was expecting that. It's just a matter of what they have to say on the quarter. If they come out this quarter and say that, they signed United and Southwest, and they still are on track to potentially do, 10 full, deals by Q1 of 2026, then that'll hold off some of the bears. But yeah, the tech platform is not doing what we want. That's for sure. Look at this, though. Consistent credit performance. Everything's heading in the right direction. The one spike, from my understanding, on the student loan net charge-offs is that they bought a book of student loans that they knew would spike it regardless. But they got a good price for it or something. Yeah. Which is already coming down.
They still showed quarter-over-quarter growth in the tech platform. I mean, they went from last quarter was 109.8 for revenue. This quarter is 114.6.
Yeah.
Yeah. Only the P in loan platform business just yet. No S just yet. We'll have to wait a little longer. But yeah, financial services contribution margin of 54%. 54, another record. We'll have to go through and actually see all the rates and here. Anything you guys are spotting as well? No?
No, not really. I mean,
pretty big student loan originations. Did you guys see that slide?
No, what is it?
1.49 billion.
That's big.
Yeah, it's huge.
I think I was expecting a little bit. So I had about 1.55 billion. Q3 is seasonally always a really strong student loan quarters because people are coming back to school. And so their in-school loans give them a bump usually.
What about home loans? That's one that I was trying to pay attention to. Did they do $1 billion?
Home loans just under 945 million.
Got to pump those home loans. LPB originations increased to a record 3.4 billion.
Wow.
That's crazy. So last quarter, I think we did 2.6 billion. And then Devin Ryan came out and said that, we're actually seeing that it's going to grow quarter over quarter. So we're expecting 2.7 or 2.8 billion. So the fact that they didn't do 2.7 or 2.8, they did 3.4 is crazy. They added $920 million from Q2, and yet a bunch of people were texting me and DMing me saying, yeah, but they haven't announced a new partnership. SoFi doesn't like to communicate, okay? But it doesn't mean they're not executing.
It's not that they don't like to communicate. It's just that, I mean, they're a little bit old school in that way, right? Like they keep things close to the chest. They let the numbers speak for themselves.
Well, that speaks for itself. Cross-buy reached 40%, up from 35% in Q2, demonstrating the power of our one-stop shop model. These two things right here might be the two biggest things of the quarter.
Yeah, and I honestly think that is more important to the thesis of SoFi, and it has been ever since they launched it, than the tech platform. That's at least what it's been about for me. So I'm not too concerned on the tech platform side, but that's really, it's kind of interesting that it's buried in the middle of that. A lot of companies would be like, we're going to make a whole slide on just this. But yeah, they're killing it.
I don't mind a rule of 40 slide.
Yeah, I like the rule of 40 slide.
That's been an interesting shift with a lot of fintech names. Block kind of started, I think, where they're trying to get to rule of 40, struggling to do that. And then a lot of their fintechs are like, hey, we can do this.
When I'm live streaming, I forget to post on X. That's my only issue. I was like, I didn't even post about this. People are probably expecting it.
Their guidance bakes in a 1 million member quarter. I mean, we basically knew that was coming next quarter, but they're saying at least 3.5 million, and they got 2.5 million year to date. So they're basically baking in 1 million member addition for the last quarter of the year.
That's a good spot. Okay, so Timeline Tanner was off by 3 months. just slightly.
So was I, right? Because the sensor tower data was just, it means that the conversion rate was lower than it's ever been before. So
Ever before. Okay, yes, sorry. 945 million. Last year we did 490 million of home loans. This quarter we've done nearly twice that.
what was it? What was the number?
945 million of originations.
Dude, I was really close on everything this quarter. I had 950.
Yeah, that is really close. Sorry, there was something else that I was looking at. I usually don't read this slide, but I'm going to go through just in case that they have some other tidbits, because they buried a couple things in some of these slides. A full suite of products and superior value proposition help members spend. Oh no, this is just okay. SOFI Pay, a crypto-powered global remittance product and AI-driven cash coach, will support members in creating a better financial future. Let's go to the press release really quick, and then we'll see.
Yeah, sometimes in quarters past, I haven't looked at the press release yet, but that's where they announced like the tech platform deals in other quarters. Was in the press release.
Yeah. Okay, stock is holding up good though, up 3%, $30.95. We'll see how it opens up whenever the market actually opens. There's usually an explosion on SoFi the second we open, either to the up or downside. But yeah. Okay. SoFi Technologies, a member-centric one-stop shop for digital financial services that helps members borrow. Yeah, let's see what Anthony Noda said. SoFi delivered an exceptional third quarter fueled by strength in our innovation and the power of our one-stop shop strategy. We achieved record adjusted net revenue of $950 million and added a record 905,000 new members. And 1.4 million new products. Our ability to consistently deliver durable growth, strong returns, and exceptional credit performance proves that our strategy is battle-tested and built to outperform. The opportunity before us is massive, and SoFi is executing from a position of unparalleled strength. That's why we are investing aggressively across the business and accelerating innovation in crypto, blockchain, and AI to help members than ever before get their money right. More members than ever before to get their money right.
LPB is now running at an annualized pace of over 13 billion of originations and 660 million of high margin return or high return fee-based revenue.
I wish they would tell me what the return is, though. I have no idea what the margin is. I know it's bringing up financial services. Like the margin's exploded since it's come out, but what is it?
It has to be like 70 or 80%. I think a lot of that. So I talked about that in one of my recent articles, where I think part of the reason that the LPB contribution margins I think are so high is because this is just me, looking at the numbers and trying to figure out what's going on. I think part of it is because I would bet that a lot of so it's less directly attributable expenses, right? I think the directly attributable expenses are probably going to lending because they're marketing for loans, right? And so they probably stick that under lending because lending contribution margins have been a little bit under pressure ever since the LPB came out. So I think a lot of that marketing is going to lending, even though the revenue ends up with LPB with financial services. So, I mean, in the end, it all gets consolidated in the end. But I think that, based on the numbers, it looks like 70 to 80% is what I think they're getting for contribution margin for the LPB.
It says, what is this? Are they talking about total products at 16.1 million? That's not what I think.
Total financial services products.
Oh yes, we're at 18 point something. Sorry, I thought we were at under 16 million. I was like, how's that possible?
18.4.
18.4. Okay. I would love to start plugging some of these numbers in. If you guys want to take over the slides, then we can actually start to look at some of these numbers quarter over quarter. Tevis, you want to do that?
Sure.
Thanks.
The other thing we haven't talked about, well, I guess we can get into it in the slides, but they have their slide on capital ratios, and you can see they're at a capital ratio above 20. They're probably comfortable getting down to around 15% ish.
All right. What did you want?
Find?
Capital ratio.
So they've got lots of room to continue to grow. I really don't expect to see any sort of a capital raise anytime soon. So
sorry, hold on. Let me do this instead.
Yeah, if they do it, it'll be today. But
you shared this
very close to it. But yeah, I think you're right.
Okay, capital ratios was which slide?
Let's see. I don't know. I had it up a second ago. It's on slide 24.
24. Yeah.
Sorry, I'm responding to TJ in the chat.
What did you want to talk to this about?
So capital ratios is essentially how much SOFI can lend out. If you look at the number on the right, that's the minimum required that they have to have. So the number in the middle has to be above that. And this has to do with how many assets they have versus how much capital they have. So when last quarter, this was down like around 15% or so, which is pretty, I think it might have been a little bit below 15%. The one that you really care about is the total risk-based capital, the third line there, because that's the one where they're going to hit the minimum requirement first. And so anyway, the point here is that they've got a lot of room to grow the balance sheet. So they can grow the balance sheet by, I don't know, I'd have to run the numbers, but probably still something like 6 to 7 billion. And since their earnings are going gangbusters at this point and kind of growing really, really fast, it allows them also to reinvest that capital to retain those earnings and build it back. Like this is my personal opinion. I know that lots of people have talked about, hey, maybe they'll do another capital raise at this point. They don't need it right now.
Yeah, not here.
Right. There's no like it's going to be a while until they think about raising capital, unless they're acquiring something.
Isn't this playing it too safe, too conservatively? Like I know
they won't keep playing it this way. It probably takes them a while to get through it.
Yeah, so because you're not going to just originate like an extra 7 billion loans in a single quarter, right? You build that up over time and bring the ratio down slowly. So this is probably about where you'd expect it to be.
Because although they're taking in $1.5 billion, they can essentially put, let's say a 6 to 8x multiplier on that. So that's the thing. They can originate so much more by raising that and putting that as essentially tangible book value.
And
that's why the ratios are so high.
Sorry.
Yeah, no.
Okay. What do you want to jump to after capital ratios? Let's see.
Net interest margin went up a little bit this quarter, right? It had kind of, or actually, I think it's mostly flat.
Funding base was really interesting. It's been going up like every single quarter. The call is at 8 p.m. Noto's on CNBC right now, they're saying. Tanner, can you pull that up? Or whoever has access to CNBC?
I can get it. But last time I tried, because I'm in terrible Canada, last time I tried sharing the screen that I was on, it was showing a black screen. Like it wasn't letting me share it.
Oh, yeah, I see him on.
Are you able to share it or no?
No.
I'll try getting it, but I don't know if it'll be in time.
Like just across the board, really, really solid quarter. Like it's interesting that it's most of what we expected, or at least what I expected, but like the expectations of this group are so much higher than Wall Street estimates, and it's run a lot going into earnings. Like I'm fine with it justifying these prices and then just continuing to compound from here. Like Tanner said, and like we've all said, right? The most important thing in the long term,
the best place to spend, to do it safely, quickly, and cheaply. In addition to that, you also become a member and you get free certified financial planning, because we're trying to help you spend less than you make and invest the rest. Half of the Americans in the United States don't invest today, and it's primarily because they have no discretionary income to achieve their goals. So that is at the tip of the sword. Another product, Relay. Both products are over 6 million products, both Relay and SoFi Money. Those are the tip of the sword. And then we drive about 40% cross-buy. It was a record this quarter because we have this breadth of products. We're using information that we have about you to help you borrow better, save better, spend better, and invest better. And so that is helping drive.
Who are you taking share from? If you were sitting around on a Monday morning with a whiteboard, looking at sort of who you actually think of as your competitor set today, who is it? Because obviously there's the banks, there's a number of the digital platforms. I mean, I'm just curious what you would. I won't answer. What do you think?
Yeah, it's not what I think, it's what I know. We can actually see where the money's coming from directly every day, and it's really coming from the banks. In the United States, there's over 5,000 banks. The large banks have trillions of dollars of deposits. We're at about $33 billion of deposits today. We added a record of $3 billion of deposits, and those deposits are coming from the big banks, the largest banks in our country, and that's on the SoFi Money product, which, as I mentioned, is the tip of the sword. In Invest, we're really actually creating new investors as well as novice investors and helping them get up the learning curve. Within student loan refinancing, we really don't compete against anyone because it's a product that's not really offered by big financial institutions. I would say in mortgage, the big banks do not offer mortgage to everyday Main Street customers. And so in each product category, the competitor is different, but overall, it's the big banks.
Right. Okay, I don't know if you saw the news this morning, and I don't know how early you've been up because I imagine you're on the West Coast. But PayPal and OpenAI just announced a partnership where you're going to actually be able to effectively pay for things using PayPal inside of ChatGPT going forward. And to me, this has huge implications for the entire sort of financial community because there's a question of both of the opportunity set to effectively partner with some of these large language models and chatbots, but there's also the possibility of remarkable amounts of disruption that could ultimately take place. How are you thinking about that?
Sure. There are two technology super cycles happening at the same time, both of which that impact the fintech sector and SoFi specifically. One is AI and the other is blockchain. We launched this quarter SoFi Pay, and you can now send dollars from the United States through a level 2 blockchain via SoFi to someone in Mexico and have it convert into the local fiat there in pesos. We'll roll that out throughout the entire world, and then we'll take the SoFi Pay app, which will allow you to pay not just via blockchain and stablecoin, which SoFi will issue, but allow you to pay any other way that you would like to. So it's a universal payment capability. So we're going to put the SoFi app in these foreign countries to allow international payments to be made. What I'd say about these press releases with ChatGPT and others is we're launching products. We're not putting out press releases. There was one yesterday about a stablecoin with a big bank. Let's watch what people actually launch and the impact that they're having. The reaction that we got from U.S. Consumers and our members from launching international remittance, cheaper, faster, and safer than the current mechanisms, was really positive. And so you'll continue to see us innovate behind both AI and blockchain. One thing that we didn't talk about is that we will be the first national bank in the United States to launch buy, sell, and hold crypto on our platform. First national bank to offer that by the end of the year. We'll launch a stablecoin in Q1, which will help us really drive faster, cheaper, and safer payments as well.
Anthony Noto taking the gloves off early at PayPal and OpenAI. We appreciate it. It's great to see you and look forward to hopefully seeing you in person soon. Thanks.
Sir, take care.
You bet.
Okay,
Joe?
Coming up, Amazon cutting thousands of jobs.
What world are we living in when Anthony Noto, the CEO of SoFi, is asked about PayPal? I mean, like, what a time to be alive, right, guys? Chris?
It's Roy's world, and the rest of us are just living in it.
I love how he said, we're launching products, we're not releasing press releases. I was like, well, isn't that a true statement? Like, please put out a press release from time to time.
I kind of get it, though. Like, he only gets a limited number of minutes every quarter to talk his book. And Sorkin is just like, what do you think of PayPal? He's like, dude, like,
yeah. Yeah.
Yeah, I had to capture a couple of screenshots there. I'm like, okay, this is nuts, but...
But once again, we got confirmation that if we didn't hear it already 10 times, that crypto is coming this year.
Mm-hmm.
That's going to happen by year end. I think it's December 1st. I think we're all kind of in that range. What else did he say during that call? Did I miss anything?
I think it was mostly kind of. I mean, he talked about cross sell and how it was the highest quarter. We've talked about that already here, though.
Yeah.
Right? We talked about how this was the highest quarter for cross sell that they've had,
and that they're eating the big bank lunch.
Which we already knew too, right?
Yeah. I think though, like with the strength of this earnings and also last earnings too, there's a lot of people that are newer in the stock and in the company, and a lot of not just on the retail side, but that are just starting to pay attention. And so I think it's important to control the narrative and put those things out there. So that was a really good presser by Noto.
Yeah, it hopefully he's on a big media cycle this time, and we get to hear a lot of his thoughts this quarter around. But let's take a look at products really quickly to see how that's done. I'll just plug some numbers really quick, and then we can get back to Tevis's slideshows. Okay, so for lending, financial services, we know all that. Actually, let me look at products per member is now 1.468. We almost hit 1.47. So it definitely was a big cross-sell quarter for sure. I actually want to see how big that it doesn't really. It's as high. It's a high from Q4 of 2023. Tech platform shrunk a little bit, which might continue till Q1. I think they've known that for some time. Personal loans ended up growing over 150,000 new accounts. The percentage of new products of personal loans was 10.6%, and 72% of all lending products is personal loans, a new high as well. Home loans grew as a percentage of their total, amount of loans outstanding. 5,000 new quarter-over-quarter home loans and 12% growth rates. Look at this growth rate over time: 5%, 6%, 7%, 10%, 12%.
And that will slow probably. Q4 and Q1 are seasonally weak in home loans, right? But still, it's great to see that. But they may, I don't know, with rates coming down, at least the 10-year coming down, they might continue to be able to grow that pretty nice, even in the weaker part of the season.
Student loans, 26,500 new student loans. So huge quarter, more than double last quarter, 4% quarter-over-quarter change.
SOFI.
Go ahead.
That's one that's very seasonal. So quarter 3 and then quarter 1 are the most important. But you look at the quarter 3 2024, there's clear acceleration there. So this signals to me, I don't know, do you guys think that this might be the next business that they launch, or a segment that they launch in the loan platform business?
I think so. I think it's more than likely that, because on the home loans, they sell them already pretty darn quick. So I don't think that the economics will be fine for LPB, but they'll be about the same as what they already do. But with student loans, I think that there's a lot of opportunity to generate more originations as rates start to fall, and put them through the LPB and just recognize it as fee-based revenue.
Yeah. Going back really quick. By the way, their bread and butter was student loans since like 2013. So I do think that they will eventually launch that. SoFi Money, 7.6% quarter-over-quarter growth, 450,000 new accounts. That's also going to lead to quite the increase of new deposits. But yeah, SoFi Invest, look at this. 190,000, big quarter for them. Year over year, that was only 60,000 growth. So last time we saw 2% quarter-over-quarter growth. Now we're seeing 6%. I should have a year-over-year tab. It's driving me nuts that I don't. I'm going to change this.
People are saying Noto's live. I'm not sure if they mean the CNBC clip that we just played of him live, or if he's live on another network right now. Let us know.
Yeah, or if he is live, let us know what thing he's on, or try to find it on X or something.
Yeah,
Credit
credit
cards,
cards is growing quite a bit too.
just crazy. Look at this growth rate: 1%, 5%, 9%, 12%, 13%.
Yeah,
And I
quarter
could have
over
rounded
quarter.
all of those up.
That's sequentially, quarter over quarter. This is insane.
Yeah. You're accelerating, and it's harder to accelerate. 47,000.
And the provision for credit losses isn't that like it's only up 3 million year over year. So they're not like they've been adding a lot of products. Thus far, it looks like the charge-offs for those credit cards that they finally got their underwriting right. Because previously, when they were growing the credit cards, those charge-offs were starting to spike. So
This
that's
is
good to see
actually
too.
a huge shock. Referred loans, 12,000, 13,000 roughly. 7,000, 12,000, 17,000 into 13,000. I wonder if this is them going down the credit box and just underwriting those loans and giving them to, their own loan platform customers rather than giving them over to Pagaya.
That's what I think because LPB is growing so fast.
Yeah, skyrocketed. SoFi Relay did a 500,000 new product quarter. That's probably what the huge cross sell was. And SoFi Invest saw a big quarter as well. And then SoFi at Work. Whoa, my gosh, 20,000
Oh,
new
wow.
accounts. Did you guys see the promotion that they had? That the APY to set up a checking account through SoFi at Work was higher than if you set it up at SoFi?
Yeah, I saw that.
So if you set up, there was a promotion that said, just over the next 6 months, we will give you 4.7%? What was the amount? No, 70 basis points higher. So it was 4.5%.
Yep, that sounds right.
APY for a 6-month time period. During that time period, they're going to boost the amount of interest that you can earn on the money that you keep at SoFi, as long as you have a direct deposit, all of this information. At SoFi at Work, so if you found SoFi through your business, they would offer you 4.6%, just slightly more, but it was a weird tick. I thought that was very interesting.
So
I
one
guess
of the
SoFi at
reasons,
Work's the easiest way to get cross-sell, right? Like if someone signs up for SoFi at Work, it's immediately multiple products.
sorry, someone
Yeah, I
else
mean,
was going to talk.
I was
Go
going to
ahead,
say it's one of those promotion things. A lot of companies will do that. SoFi rarely does that sort of thing, but obviously it's working. They're accelerating PayPal at Work, not PayPal at Work, SoFi at Work, and that's a really important part of the ecosystem. So like that was I agree, with you guys that was one thing that was kind of missing, that we weren't seeing too much cross sell yet, and the flywheel wasn't working as well as we would like. Usually they have that 1.5 products per member, and we would like to see that increase. It had gone the opposite direction, and now it's beginning to go the direction that we think that it should. Of course, it's going to help as they launch more and more products on that. They have the members now, so this is just exactly what I wanted to see too.
Someone said we forgot to mention, and I thought about this, but forgot the name of the company. We forgot that the Paychecks went live in July, right? Their partnership with Paychex. So that's probably, I would guess that's a reason for the bump. I think Relay doesn't really give SoFi much revenue. I do think I think that it's one of their, if they get it right, I think that it could be a sleeper portion of how they really get cross sell, because that's where Cash Coach sits inside of SoFi, is inside of Relay. So if they can get more people into there, then it will allow them to do things like when I use Cash Coach, it's like, hey, you should move some money over into your investment portfolio because it's just sitting, like set up a 6-month thing and then from there invest the rest. And so I think and the same thing, if people have large credit card debt somewhere else, then it's going to say, hey, you should consolidate this into personal loan. So I do think that Relay itself is probably where they're looking to drive a lot of the cross sell. And so I kind of look at it as a forward indicator of cross sell is how much they're driving Relay. And we'll see if that's the thesis, right? We haven't seen it play out yet, but that's kind of how I think that they're looking to leverage both SoFi at Work and Relay is as a driver of cross sell.
Let's take a look really quickly at SoFi's EPS. Some people just popping into the stream now. Good morning, everyone. just want to say it was another triple beat. SoFi ended up raising guidance, hitting 11 cents of EPS and $950 million of adjusted revenue. I definitely came in here with very strong expectations from SoFi, driven by, Sensor Tower data and Devin Ryan and all of these comments, which Devin Ryan was a little too bullish this time. But that said, at the end of the day, this is adjusted EPS for SoFi. Over time, we end up seeing the same compounding, member growth, cross-sell, everything you are going to see. And this is, by the way, dilution happened between these 2 quarters. You don't really see it. That they are going to continue to execute and bring more dollars back to shareholders. And according to what we saw from their earnings update for Q4, that is expected at what? What was it? 14 cents? What was the updated number for?
It's 37 overall. So minus 11, minus 8, minus 6. So 12 cents, I guess, is the what they're guiding for. But that means that they'll get at least 13 probably, or 14, most likely.
That's the hope.
Let's say 15, so it's an easy 40 cents EPS.
Can we just take a moment and appreciate how close Chris's predictions were for this quarter? Because
you're referring to yourself in third person?
I am. I'm referring to myself in the third person. I said 7.6 billion in personal loan originations. They got 7.5. I said 1.55 in student loan. They got 1.45. I said 950,000 in home loans, and they got 950,000. I got the revenue on the dot. So my prediction was 949.9. They got like 949.7. And then I said 11 cents of EPS, and even my segment breakdown is within like 4 million per in each one. So
were you on the
leaked it
call
to
with
you?
LaPointe before or after?
Yeah.
no, I have not talked to anybody from SoFi in quite a while about their results or about their company. Or the last time I talked to Chris LaPointe, like had a call with him about investor stuff, was after last Q3 when the LPB came out, because we had a bunch of questions, and so I reached out to investor relations and they hooked me up there. So no, I am not. I have no insider information.
Okay.
I'm just tooting my own horn.
Call is in about 15 minutes or not. So
Yeah. Just a quick update on the stock. It seems to be just waiting for earnings call right now. $30.86, up 2.87% in the pre. So people are just waiting. Really quick. PayPal did have a strong quarter. Are you looking at that, Roy?
Yeah. I just started going through the slide deck here a few minutes ago. So really nice. Not just announcements, but yeah, free cash flow is there. That was one thing that was lacking with the prior to. I wasn't too concerned about it because I kept reiterating revenue is accelerating. And then the weird thing is, so here I'll just share this.
There was a guy in the Discord that had a SoFi earnings bingo card, and he didn't get bingo because Tanner is late was one that he thought was going to be a free space.
You should have Roy is late.
And I was not.
So this is so fun right here. They've been having headwinds because of being an international company for a long time. We're going to see this for not just PayPal, but a lot of companies as well. When you get to the size of PayPal, you, of course, hedge against any currency issues to a certain extent, but you do it less and less as the DXY is under 100. And so, yeah, they actually reported revenue north of their dollar neutral for the first time since I've been an investor. I know that they've done it before, but it's been a long time, guys. But yeah, this is just like across the board, really, really strong. The only thing that wasn't quite as strong as I was thinking was active accounts. So I'll have to do some digging, but it's good. I mean, it's all-time high, so can't really complain with that. Yes. The dividend's an interesting choice. I thought that they might do that in like a year and a half to 2 years. And, some people were asking for it. Steve, I know, probably is a happy guy today. But, yeah, Brandon's accelerating too.
What was the dividend?
14 cents.
What is that? How much money are they giving to it? Like $1 billion?
I don't know. I didn't get to that point. So.
Oh, okay. Got you.
So actually, the 905 members for SoFi was gross. The net was 896.
Interesting.
So under 900 net.
Really?
Yeah.
That's also a huge churn. Well, not huge, but bigger than what we used to see.
It's like 10,000, 9,000.
Why you got to ruin the fun, Tevis?
Dude, I don't know. I'm just trying to be helpful here.
Okay. Yeah, I'm also excited. Like if whenever we look at the default rates and everything, coupon rates look really strong still. I'm curious to what like the way the earnings calls sort of break out is Anthony Noto's going to give his remarks. He's going to go through everything that they're expecting, and like that's usually very exciting. Then the part that you guys find very boring, which is the CFO commentary, is what institutions love. And the stock can really pop or drop on what Chris Lapointe has to say. Then after that, we're going to get Q&A, which is a mixed bag of analysts that sometimes ask good questions. We pray for good questions this quarter round.
Last quarter was disappointing. The questions were disappointing, that is.
I can't remember. I think Reggie Smith said something that we clearly already knew. I don't remember. Reggie's a mixed bag. We'd love to have you on the channel.
I did ask if I could ask a question, and I'm once again not asking a question. Oh, I have my SoFi shirt on. I forgot to point that out.
There you go. Okay, what else did we see before we end up getting into earnings for the great and powerful SoFi stock?
Somebody put the question, what is free cash flow? Sorry,
SoFi
that was
doesn't
specifically
know.
for me, I think.
Very important for banks, right, Chris?
Very, very important.
Okay.
Oh, the one other thing, I guess, as I was looking through the slides that I don't think we quite touched on was that their execution level for their sold loans was also the highest. I don't know if it's the highest it's been, but it was higher than last quarter. It might have been the highest that it's been like ever. So, and that's something that we saw also in like Lending Club's results, is that they were getting really high levels and good pricing on their loans. Yeah, it's the second highest it's ever been for their gain on sale margin on their loans. So like everything looks good from the borrower perspective. Originations are up, demand is up, and like the delinquencies and charge-offs are down. From the investor perspective, LPB volume is up, their loan sales are at higher execution rates. Like it's really hard to like nitpick these and think like building a bear case from these results is really, really difficult. I can't see, I don't know. I like they're just compounding.
What
and at
even
this
is
point,
the
it
biggest
seems like they're
bear
going to
case?
just keep compounding. Sorry, Tevis, what?
Like, what even is the biggest bear case now? I haven't been keeping up to date with arguments.
I don't think there is any anymore. It's just the valuation.
The valuation?
Yeah. Just that
It's run up a lot. I mean, people will always say that when you've run this hard. And especially, I mean, it's a bank, more than a bank, but the price of tangible book value would be like, it's extreme, it needs to come down. It doesn't. They're just wrong. But
Can we get whoever's covering Robinhood for Compass Point? I would love for him to cover SoFi for Compass Point instead, because like he was like talking about like EV over EBITDA multiples and like how he's talking about growth and EBITDA and like all these other things that I'm like, oh, these are the exact type of things that somebody who's covering fintech ought to be talking about. Why can't we get this guy?
Who do we got?
Anyway.
Timothy Switzer or something?
No. That one is Juliana.
Oh, nice.
Which he's a nice guy. Like anyway, but I just don't agree with the valuation, the way he values SoFi.
Giuliano's been nice to me, but
Yeah, no,
you know
he's
what?
like,
He's got the lowest price on the street, so I'm gonna laugh. He's been the most wrong. Nice guy, you know.
him and Tim Switzer also has thrown his hat in there for the most wrong.
Friendly with kids. I heard he donates to charity. He's wrong on SoFi.
Yep. Great guy.
I'm not making a character like assassination. He's just he thinks they're a bank, and I think they're more than a bank.
Yep.
Did you guys see KPW came out with a sell rating on Berkshire? And I posted it last night. I was like,
oh yeah,
well,
I saw that.
they're in good company, I guess.
What was this? Sorry.
KBW came out with a sell rating on Berkshire, and
Like the stock, Berkshire Hathaway.
Yeah, he's bearish on Buffett, and I was like, oh well, yeah, they're bearish.
The valuation's extended. How can you be bearish on Buffett?
So he might be bearish on both just because they're not. They have a lot of cash that they're not deployed, and we saw that ratio was 20% for SoFi as well, which is a little bit higher. I don't know. I'm guessing that's probably his argument because they've been raising a lot of cash. I think for that transition time when Buffett hands over the reins.
It's like 340 billion or something. Like it reached some new record amount.
The commentary on guidance says management expects growth in tangible book value of approximately 2.5 billion for this year. Have we seen how much they've grown so far? Like, would that be extending tangible book value even further next quarter?
I'm sure it is. I mean, it pretty much follows. It follows at the adjusted EBITDA line pretty close. And so, if adjusted EBITDA is going up, it means the tangible book value growth is going up. And obviously, it went up a lot with the capital. It was 1.5 billion with the capital raise, but it's not one for one. But you can look at the adjusted EBITDA line and kind of equate it to approximately how much tangible book value growth they're going to have in the quarter.
Yeah. Okay.
I think this has been one of our flattest, if not the flattest, quarter pre-market in terms of like a move.
Yeah, TJ's really happy. TJ has a strangle.
Yeah.
I think the bottom is 28 and the top is like 35 or something. So if it stays in between those numbers, I think he makes it's some absurd amount of money in like the hundreds of thousands of dollars.
No, I think it's in the millions.
No, he's already recognized, or he's already in the millions in profit, and like this is another. I don't know. He's in my chat. TJ, tell me how much you're going to make if it.
I thought he commented in my chat. It's like 1.5 million.
That's wild. He's the happiest of us all.
That's right.
I mean, that's what smart money's doing, I guess. I buy and hold, baby. Josh is calling for 33 today.
I mean, I think that they fully justified the run up, right? Like that's the thing is that you look at these numbers and you think, yeah, $30 at that valuation for this type of results, 38% year-over-year growth, continued margin accretion, other things like it totally looks justified, and I think it's going to continue to compound from here.
What's going on with PayPal over on your end, Roy?
Hadn't been looking at the stock, but I mean, when Anthony Noto gets asked about PayPal again, like they've done something well for a change. They've actually captured the market attention. Last time they actually had a similar sort of strategy, but the announcements kind of fell flat. Where they announced a lot of different stuff and partnerships. Yesterday, they announced 3 different partnerships. Today, OpenAI. Earnings were very good, triple beat across the board, just like quarter 2. Some acceleration there on the top end, which I think the market also likes. Although I think without the OpenAI partnership, would probably be up a little bit, but maybe not a lot. So, and I see a lot of people too, like, there's nothing wrong with taking gains. If you've been in PayPal a long time, you're like, hey, I just wanted to pop and get out. Absolutely. There's nothing wrong. I think this is just the beginning, that they've turned the corner. Quarter 4, I think, is going to be a phenomenal quarter. But I mean, you never can't tell. And PayPal, the market does like to sell it off, just like SoFi. Usually before the earnings stuff, but yeah, here we are. 70, by the way, has been ridiculously hard, almost impossible resistance for the longest time. So this could also be, we'll see what it does today, a technical breakout as well for those that are TA guys. So it wouldn't shock me if there's a lot of traders that also start paying attention to PayPal as well.
Yeah, it's probably going to be a sell at 80. Like, technically speaking, people are going to start, like, it's a psychological level as well. Call starts, and by the way, Roy and I will be covering PayPal later today. For sure, we will be covering PayPal later today on our show, Bootleg Weekly without Tanner. Okay, so 5 minutes until the call, I just want to do a quick game. What is one thing, an unconventional bingo card item that you think they're going to mention on the call? Something out of pocket, something random. You can only have one.
Wait, what?
OpenAI. I think that they'll mention OpenAI for some reason. So, or AI agents. Let me just take AI agents. That'd be weird, but
that's easier. I think AI agents is easier.
They're going to talk about Cash Coach.
Chris, what do you think?
Man, I don't know.
One thing they're going to talk about?
Yeah, but like unconventional, you can't say like, oh, well, credit before. Like,
I think he'll talk about Latin America.
Ooh, okay.
And I think that anyway, one of the line items that I think is actually interesting is that like in the reconciliations that's great or increasing every quarter is actually their line item for FX, which means that I think Technisys is taking off a lot in LATAM. So I think that they'll mention that. There you go.
Tanner?
Yeah, it does seem like they're only hiring for Galileo is in LATAM as well. Shout out to Vadim, by the way. His coverage on the hirings and firings is not firings, but the hirings of SoFi is good.
Somebody said they're going to talk about stock code.
What's one thing I think they're going to talk about? Home loans.
Dude, I'm saying unconventional. Like some people are saying like tokenization, stable coins.
Yeah, stable coins will be in there.
Launching in Canada. Good luck with that. They're not going to do that at all. I wonder if they're going to talk about Derek White or like leadership changes at Technisys. Probably not, but
probably not. I mean, they won't talk about Derek White. They might talk about a new person coming in and welcoming them, but they're not going to talk about who.
What happened or whatever. I don't think they're gonna.
Yeah, if there was a press release and everything, and it was a mutual, I don't know. I don't know what happened. I don't know what happened.
There wasn't a press release though.
Was?
There was not.
No, I know. That's why I don't think they're going to bring it up.
Yeah.
But yeah, we did have some commentary about PayPal. But that's mainly on Roy's side.
Yeah, I think that the secret is whatever stock I'm not covering live does well. So next time, guys, UNH I'm going to cover live, and SoFi and PayPal are just going to freaking pump. So,
bro, don't dump UNH for me.
It's not even done, dude. SoFi is up 2.5% on the day. It's not like you can short whatever Roy goes live on. But yes, 14.5% on PayPal is an extreme day right now.
Tanner, are you bringing up the call?
Yes. But was I ready? No. Will I be? Yes. Okay, ladies and gentlemen. Now, I wish we had Bruce Buffer in our live stream. Okay, I have it up. It's just music right now. How about an acquisition? That could happen. That could definitely happen. They talked about an AI name last time or on a fireside chat, potentially acquiring a small AI name. Maybe it would be similar to like Robinhood with Pluto.
Or a crypto name.
Or a prediction markets name.
Ooh.
We could dream.
I don't think that's going to happen. It's not in their ethos. That's not getting your money right.
Yeah, but I mean, neither is margin and a bunch of other products that they do. So I don't think it's. I don't know. Oh wow, there's a ton of volume on SoFi right now. Oh my gosh, there's a huge amount of volume right now.
Yeah, and it's still
Actually it's not that big, but
for pre-market. That's really
pre-market,
big.
1,000 shares.
No, it's like 2.7 million.
1,000 shares.
No, sorry. I'm seeing 1 million shares. Sorry.
It's like, did Josh just buy 1,000 shares?
It's just 8 a.m. That's all it is.
Yeah.
Yeah, you could be right. Not everyone's on 24-hour markets. Okay, we still have music playing in the call. Once it's ready, I will switch over.
Noto pulling a Tanner.
Crazy. I can't even blame him. It's like what, 4 a.m. or something, or 5 a.m. over there.
What if he mentions Tanner on the call?
Call starting. if he mentions me, I'll donate $10,000 to the chat.
Okay.
All lines have been placed on mute to prevent any background noise.
If you're hearing this, Noto, you could make a great
session.
show.
If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press star followed by 2. Thank you. With that, you may begin your conference.
Thank you and good morning. Welcome to SoFi's third quarter 2025 earnings conference call. Joining me today to talk about our results in recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release on the investor relations section of our website. Unless otherwise stated, we'll be referring to adjusted results for the third quarter of 2025 versus the third quarter of 2024. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties. These statements include, but are not limited to, our competitive advantage and strategy, macroeconomic conditions and outlook, future products and services, and future business and financial performance. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and a subsequent 10-Q filing, which will be made available next month. Our actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our subsequent filings made with the SEC, including our upcoming Form 10-Q. Any forward-looking statements that we may make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. We had an excellent third quarter. Our one-stop shop strategy is firing on all cylinders as we continue to deliver exceptional financial performance while also investing in our business to drive durable growth and strong returns over the long term. In fact, our focus on product innovation and brand building has never been stronger. There's more happening at SoFi today than at any other time in my 8 years with the company. We are stepping on the gas to accelerate the investment in our existing businesses and entering new areas like crypto and blockchain, AI, SoFi Pay, providing fiat and crypto banking services, and so much more. I'll discuss some of these efforts momentarily, but first, let me cover key results for the quarter. Starting with the drivers of our durable growth. We added a record 905,000 new members in Q3, increasing total members by 35% year over year, a slight acceleration to 12.6 million SoFi members. We also added a record 1.4 million new products, also representing an acceleration in growth to 36% year over year and over 18.6 million products. Cross-buy reached its highest level since 2022, with 40% of new products opened by existing SoFi members. Our cross-buy rate has increased in each of the past 4 quarters, demonstrating the effect of revenue growth in the third quarter. Adjusted net revenue was a record at $950 million, up 38% year over year. Together, Our financial services and technology platform segments generated revenue of $534 million, which is up 57% year over year, and now represents 56% of total revenue. This is the first time these segments have generated more than $500 million of quarterly revenue. In our lending segment, adjusted net revenue grew 23% year over year to $481 million, driven by strong originations in the segment of $6.6 billion, up 23% from the prior year. Combined with a very strong $3.4 billion of originations in the loan platform business, total originations reached a record of $9.9 billion for the third quarter. This is an increase of $1.2 billion from our prior record. I'm also proud to report that total fee-based revenue across our business was also a quarterly record at $409 million, up 50% from the prior year, driven by strong performance from our loan platform business, origination fees, referral fees, interchange revenue, and brokerage fee revenue. On an annualized basis, we're now generating over $1.6 billion of fee-based revenue, reflecting the deliberate diversification of our business towards more capital-light revenue streams. In addition to delivering durable growth, we delivered strong returns and profitability. In the third quarter, adjusted EBITDA was a record at $277 million, up nearly 50% year over year. Our adjusted EBITDA margin for the quarter was 29%. Our incremental EBITDA margin was 35% as we continue to balance reinvesting in the business to deliver long-term growth and delivering profitability. Net income for the quarter was $139 million at a margin of 14%. Earnings per share were 11 cents. Finally, our tangible book value ended the quarter at $7.2 billion, which includes the benefit from a successful opportunistic capital raise during the quarter. Over the past 2 years, we have more than doubled our tangible book value. Our diversified business is uniquely built to deliver a winning combination of growth and returns. One way to measure the success is the Rule of 40 calculation, which is revenue growth plus EBITDA margin. We've beaten the Rule of 40 benchmark every quarter since going public. That's 17 straight quarters. Over that time, our average Rule of 40 score is 58, making us a top performer among fintechs and technology companies more broadly. And this quarter, we hit 67%. Despite these exceptionally strong results, I know that we are just getting started. The addressable markets across each of our products are massive in the United States, let alone in addition to international markets. In 2026 and beyond, we will uniquely start to benefit from both of the technology supercycles in AI and blockchain, where almost every other industry only benefits from one. And with nearly 13 million members, the unmatched capabilities of our technology, and the business scale of $3.8 billion in annualized revenue and a $45 billion balance sheet, we have a rock-solid foundation to build on. Given these dynamics, I've never been more optimistic about our prospects than I am today. This is why we are further accelerating our level of investment to make our existing products even better by providing the best speed, selection, and experience, to build new products to help our members get their money right, and to further strengthen our trusted brand name. Our investments will power our durable growth and drive stronger returns as we continue to scale. Let me now spend a moment discussing our brand-building efforts, which are key to driving new members to SoFi and create a halo effect across our entire offering. During the third quarter, we launched an exciting new partnership with the NFL's most valuable player, Josh Allen, to promote the most valuable product in financial services, SoFi Plus. Our partnership with Josh is resonating with NFL fans, driving a 35% increase in unaided brand awareness among that target audience. Along with our broader marketing efforts, we drove unaided brand awareness to an all-time high of 9.1% during the quarter, up from last quarter's record of 8.5% and more than 4x higher than it was when we went public. Turning now to our product innovation. Last quarter, I spoke about how we are at an unprecedented point in time with two technology supercycles taking place in crypto, blockchain, and AI. These supercycles have the power to completely reinvent the future of financial services, and we have moved fast to take advantage of these opportunities. I'm pleased to report that this week we launched our first payment product that leverages blockchain technology to provide fast, seamless, low-cost, and safe international payments with the launch of SoFi Pay. SoFi Pay gives members the ability to seamlessly send money in local fiat abroad by leveraging a layer 2 blockchain network and delivering local fiat into the account of the recipient. It's fully automated in the SOFI app at significantly faster speeds and lower costs compared to traditional services. Members will first be able to send money to Mexico, with planned stage rollouts in Europe and South America in the near future. The SOFI Pay wallet will over time integrate SOFI USD stablecoin that we hope to launch in 2026. We also have plans to offer the SOFI Pay app natively in international markets for foreign citizens to send money to the US and many other international markets. This is another addition to our unprecedented money movement offering, which allows members to seamlessly send money through person-to-person payments with a phone number or email address, as well as Zelle, ACH, self-serve wires, and now the ability to send money internationally with SOFI Pay. I am also excited to share that this quarter we'll be relaunching the ability to buy, sell, and hold crypto assets, which will give members access to dozens of tokens directly in our SOFI app. Beyond offering the best selection, we will also be providing the best speed and convenience. Members can instantly fund buying cryptocurrencies from their FDIC-insured SOFI Money account, all within the integrated SOFI app. Members will also have the ability to transfer the crypto assets to SOFI and benefit from our broad range of products that are seamlessly integrated with our SOFI North American Bank. And because many of our members may be new to crypto investing, we will support them with the best content to help them understand crypto investing and provide them with the peace of mind that comes from working with a regulated bank. But this is just the beginning of our ambitious crypto and blockchain product roadmap that will continue to come to life in 2026. I could not be more excited about the product roadmap and the multitude of use cases we have for our planned stablecoin, SOFI USD, and our ability to differentiate a stablecoin like no other company, given our unique bank license, technology capabilities, portfolio of products, and technology platform services. Turning now to the other supercycle, AI. We continue to test and implement a number of AI applications across our business. Behind the scenes, AI technology has been key to streamlining our operations to better serve our members. This has included using AI to promote higher quality engagement and giving our frontline member service team AI-driven tools to more quickly identify and resolve member issues. AI is also now being used to directly support members. Our AI support chat is helping members resolve questions in an efficient way, driving a noticeable impact on member satisfaction. It's currently integrated with our money and card products and will be rolled out across the entire SOFI platform this quarter. We've also launched the AI-driven Cash Coach to qualifying members. Here's how it works. From the home screen, members see a button saying Cash to Optimize. By tapping that button, the Cash Coach will look across both their SOFI and external accounts to see where cash utilization is suboptimal and provide them with personalized financial suggestions. For example, if a member is earning just 2 lousy basis points of interest on deposits with a big bank, it may suggest moving that cash to a SOFI account earning 3.8%, paying down a big bank credit card balance from a big bank that has a 25% interest rate. Cash Coach is just the beginning. Next year, we will launch a more comprehensive SOFI Coach that incorporates insights across all areas of financial activity, not just cash, which will be able to help members understand how to spend less than they make and invest the rest by breaking down what they must do, what they should do, and what they can do every day across their entire financial lives. For example, they could ask the SOFI Coach questions like, how has my credit score changed? How can I reduce my cost of debt? How much do I spend on subscriptions? How diversified is my portfolio? How is my investing compared to others my age? Over time, SOFI Coach will be able to do even more, like provide investment and lending options to choose from, help set up and track goals, and simplify processes like canceling subscriptions and optimizing reward points. We are so excited about how this AI-driven tool will help engage members and help them spend less than they make so they can invest the rest. Ultimately, SOFI Coach will supercharge our financial services productivity loop and lead to a deeper relationship that drives a higher lifetime value. Turning now to product innovation within our segments, starting with the financial services segment and the loan platform business. LPB has been a game changer for SOFI, diversifying our lending activity in a capital-light, low-risk way. It's a prime example of how we can leverage our unique tech, customer acquisition, and operations capabilities to build a differentiated platform at scale. During the third quarter, we originated $3.4 billion of loans through our loan platform business, an increase of over $900 million from just last quarter. On an annualized basis, after just 1 year, this business is now running at a pace of over $13 billion of originations and $660 million of high margin, high return fee-based revenue. Importantly, we continue to increase the loan platform business near-term volume that is outside of our traditional credit box, effectively monetizing more of the roughly $100 billion of loan applications that we were not able to meet each year. Looking ahead, the opportunity for this business remains significant and demand from our partners continues to increase. Recently, as some concerns have emerged within the private credit markets, we've actually seen our LPB partners lean in to do more with SOFI, not less, reflecting a flight to quality and durability through interest rate and economic cycles. We have worked hard over the last 8 years to develop unique skills in underwriting, marketing, pricing, insights, and data, and as such, we are benefiting from this flight to quality. Turning to Invest. Earlier this month, we launched Level 1 Options, which has been consistently a requested feature by our members. Options are another way we are providing access to our members that they otherwise wouldn't have so they can build portfolios that align with their financial goals. As part of this rollout, we also provide educational resources explaining how options work, the risks involved, and how to integrate them responsibly into a diversified investment strategy. Beyond options, we're also expanding our unmatched selection in the third quarter by providing access to IPOs like StubHub, Klarna, and Figma, and by launching the SOFI Agentic AI ETF. During the quarter, we also improved our features to make our Invest products more intuitive and engaging. For example, we launched 24/7 instant transfers between Invest and Money, and we launched embedded rollovers and an enhanced rollover tracker giving members full visibility and control over their 401k rollover process. In the fourth quarter, we'll be making a number of additional enhancements. We are very excited about the progress made to build an investment platform that provides our members with way more options than what they would typically have access to. Turning now to SOFI Money, which has been a core part of our financial services productivity loop. In 3 years after acquiring our banking license, we have 6.3 million products and $33 billion of deposits. Our attractive APY is a compelling reason for members to make us their primary financial institution, but members also come to us for our best-in-class products and continued innovation. For example, we will soon be launching the SOFI Smart Card, a new card that brings together the best features to help our members spend, save, and pay better. It will be part of our SOFI Plus offering, and it will serve as a platform for continuous innovation. The card will offer 5% back on food, our highest interest rate on deposits, credit builder capabilities, borrowing capabilities, and so much more. This is yet another way in which we are pushing the limits on what is possible with banking products. Turning now to our lending segment. Lending is the most tenured core capability of SOFI and is how our business got its start. Since that time, we have made significant progress strengthening both our member acquisition and our underwriting capabilities. For loans that we hold on our balance sheet, we focus exclusively on high prime and super prime borrowers with strong cash flow and FICO scores. In fact, the average FICO score of our personal loan borrower is 745, and our student loan borrower is 773. But we don't stop at credit scores. We use tried and true underwriting techniques to assess each individual borrower's cash flow and their ability to repay the loan. We are able to do this effectively at scale because of our innovative originations platform that leverages advanced technology and digitally enabled processes. The result is excellent credit performance that continues today. In fact, during the third quarter, we saw our net charge-off rates improve, even as there has been moderate signs of stress showing up for some other companies. For both personal loans and student loans, net charge-offs were down more than 20 basis points in the third quarter. We also have a strong track record of building great lending products that help our members create a better future. For example, our innovative personal loan product allows members to refinance absurdly expensive credit card debt held at other institutions to save their hard-earned money. No longer will overachievers be suckered into chasing rewards only to realize they are paying over 20% interest on unpaid principal balances while earning essentially no interest on that same bank's deposit account. We've recently made this product even more attractive to our members by rolling out an interest-only period to raise awareness of the personal loan product and help ease the transition from making credit card payments to making personal loan payments. Similarly, in student lending, we have completely changed the game, becoming the preeminent company for refinancing student debt at more affordable rates. Our student loan refinance product can reduce a member's interest rate by a couple hundred basis points, which will have a meaningful impact with a $40,000 loan balance. In fact, we estimate that we will save our members over $100 million in interest expense just on the student loans we refinanced during the third quarter. This is why we've made our product even more attractive by rolling out a feature that allows for the gradual step up in payments to help members find their footing. We look forward to helping even more members refinance their student loans as interest rates come down in the future. Turning now to home lending, where we are seeing very strong results. In the midst of the higher rate environment, we built and launched a home equity loan product to help members take advantage of their equity that has been built up in their homes, particularly over the last few years. In the third quarter, just 1 year after launch, we originated over $350 million of home equity loans, helping us set a record of $945 million of originations for all of home lending. In fact, Q4 will likely be the first quarter where we generate more revenue from home loans than from student loan refinance, which was our first product and the largest product prior to COVID. At the same time, we're preparing for lower rates to further accelerate our home loans business in 2026. We've not only strengthened our operations, but we have also enhanced our product to make them very attractive to our estimated 3 million members who currently have mortgages elsewhere and to those who may be first-time home buyers. We believe our offering will drive strong growth as the market opens up. Turning to our tech platform segment. This business has been instrumental in our ability to innovate across the SOFI platform, and it's now allowing a broader range of companies to bring innovative programs that drive greater loyalty and engagement to their customers. In fact, today, we are incredibly excited to announce our newest partnership with one of the largest airlines in North America, Southwest Airlines, to power their Rapid Rewards debit card, which combines the convenience of debit payments while earning points on everyday purchases. We've also signed on 2 major consumer brands, our largest yet, which will be announced in due course. These partnerships are a reflection of the strong and growing demand for our market-leading technology to power embedded financial products at scale for some of the most well-known brands around the world. As you can see, it was an eventful third quarter at SOFI, and we are as energized as ever as we wrap up the year and head into 2026. With that, let me now turn the call over to Chris.
Thank you, Anthony. We've delivered another strong quarter as we continue to drive durable growth and strong returns on the way to delivering record revenue in our 8th consecutive profitable quarter. For the quarter, revenue grew 38% year over year to a record $950 million. Adjusted EBITDA was also a record at $277 million and a margin of 29%. Net income was $139 million at a margin of 14%. And earnings per share was 11 cents. Similar to the last 2 quarters, this included a small benefit related to a lower tax rate. An important driver of our growth was the increased contribution from capital-light non-lending as well as fee-based revenue sources. Our non-lending businesses generated $534 million of revenue, up 57% year over year, and we also generated record fee-based revenue across all segments of $409 million, up 50% year over year. Turning now to our segment performance. In terms of financial services, for the third quarter, net revenue was $420 million, up 76% year over year. Contribution profit was $226 million, up nearly 2.3x from last year. Contribution margin was 54%, up from 42% last year. Net interest income for this segment was $204 million, up 32% year over year, which was primarily driven by growth in member deposits. Non-interest income grew nearly 2.6x to $216 million for the quarter, which equates to over $860 million in high-quality fee-based income on an annualized basis. Importantly, improved monetization continues its strong contribution to revenue growth. Financial services revenue per product surpassed $100 for the first time, reaching a record $104 in the third quarter. That's up over 28% year over year, and we see continued upside as newer products mature. In Q3, our loan platform business generated $168 million in adjusted net revenue, up 29% from just last quarter. Of this, $165 million was driven by the $3.4 billion of personal loans originated on behalf of third parties, as well as referrals. Additionally, LPB generated $3 million from servicing cash flows, which is recorded in our lending segment. The growth opportunity for this business continues to be very strong. Beyond our LPB revenue, we continue to see healthy growth in interchange, up 55% year over year, driven by close to $20 billion in total annualized spend in the quarter across money and credit card. Shifting to our tech platform, for the third quarter, we delivered net revenue of $115 million, up 12% year over year. Contribution profit was $32 million at a contribution margin of 28%. Revenue growth was driven by continued monetization of existing clients, along with new deals signed in new client segments. Turning now to our lending segment. For the third quarter, adjusted net revenue was $481 million, up 23% from the same period last year. Contribution profit was $262 million, with a 54% contribution margin. These strong results were primarily driven by growth in net interest income, which increased 35% year over year to $428 million. During the quarter, we had record total loan originations of $9.9 billion, up 57% year over year. Personal loan originations were a record at $7.5 billion, of which $3.4 billion was originated on behalf of third parties through LPB. In total, personal loan originations were up 53% year over year. Student loan originations were $1.5 billion, up 58% from the same period last year. And home loan originations were a record $945 million, a year-over-year increase of nearly 2x. Capital markets activity was very strong in the third quarter. We sold and transferred through our loan platform business a record $4.6 billion of personal, home, and student loans. In terms of personal loans, we closed $175 million of sales in whole loan form at a blended execution of 106.4%. All deals had similar structures to other recent personal loan sales, with cash proceeds at or near par, and the majority of the premium consisting of contractual servicing fees that are capitalized. These sales included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would have had otherwise if we held on to the loans. Additionally, we sold $90 million of late-stage delinquent personal loans. By selling these loans, we're able to generate positive incremental value over time versus selling after they charge off, both from our improved recovery capabilities and by maintaining servicing. In terms of home loan sales, we closed $585 million at a blended execution of 102.9%. And in terms of student loan sales, we closed $377 million at a blended execution of 105.9%. In addition to our loan sales, we executed a $466 million securitization of loans originated through our loan platform business. This channel provides our partners with meaningful liquidity to support their ongoing investment in the loan platform business. The transaction priced at industry-leading cost of funds levels with a weighted average spread of 98 basis points. Turning to credit performance, the health of our consumer remains strong and our credit continues to improve. Our personal loan borrowers have a weighted average income of $157,000 and a weighted average FICO score of 745, while our student loan borrowers also have a weighted average income of $157,000 with a weighted average FICO score of 773. For personal loans, the annualized charge-off rate declined by more than 20 basis points to 2.6% from 2.83% in the prior quarter. Had we not sold any late-stage delinquencies, we estimate that including recoveries between 90 and 120 days delinquent, we would have had an all-in annualized net charge-off rate for personal loans of approximately 4.2% versus 4.5% last quarter. The on-balance sheet 90-day delinquency rate was 43 basis points, consistent with the prior quarter. For student loans, the annualized charge-off rate also declined more than 20 basis points to 69 basis points from 94 basis points in the prior quarter. The on-balance sheet 90-day delinquency rate was 14 basis points, consistent with the prior quarter. The data continues to support our 7 to 8% net cumulative loss assumption for personal loans in line with our underwriting tolerance, although we continue to trend below these levels. Our recent vintages originated from Q4 2022 to Q4 2024 have net cumulative losses of 4.4%, with 39% unpaid principal balance remaining. This is well below the 6.08% observed at the same point in time for the 2017 vintage, the last vintage that approached our 7 to 8% tolerance. The gap between the newer cohort curve and the 2017 cohort curve widened by a more favorable 29 basis points after a widening improvement of 19 basis points in Q2. Additionally, looking at our Q1 2020 through Q2 2025 originations, 60% of principal has already been paid down, with 6.7% in net cumulative losses. Therefore, for life of loan losses on this entire cohort of loans to reach 8%, the charge-off rate on the remaining 40% of unpaid principal would need to be approximately 10%. This would be well above past levels, further underscoring our confidence in achieving loss rates below our 8% tolerance. Turning to our fair value marks and key assumptions. As a reminder, we mark our loans at fair value each quarter, which considers a number of factors including the weighted average coupon, the constant default rate, the conditional prepayment rate, and the discount rate, comprised of benchmark rates and spreads. At the end of the third quarter, our personal loans were marked at 105.7%, in line with the prior quarter. This was primarily a function of a lower benchmark rate, which was mostly offset by higher prepayments and a modest change to the weighted average coupon, as well as a modest change to the annual default rate, which was driven by loan vintage seasoning, not changes to the individual loan loss assumptions. At the end of the third quarter, our student loans were also marked at 105.7%, down 9 basis points from the prior quarter. This was a function of a modest decrease in the weighted average coupon, partially offset by a lower benchmark rate. Turning to our balance sheet. In July, we raised $1.7 billion of new capital in the form of common equity. This opportunistic raise significantly increased our capital levels and allowed us to reduce our higher cost debt by $1.2 billion, making our balance sheet even stronger and giving us great flexibility to pursue growth opportunities. In the third quarter, including this new capital, total assets grew by $4.2 billion. This was driven by $2.7 billion of loan growth and approximately $1.2 billion of growth in cash, cash equivalents, and investment securities. Total company-wide cash at quarter end was $3.7 billion. On the liability side, total deposits grew by $3.4 billion to $32.9 billion, primarily driven by growth in member deposits. Net interest margin was 5.84% for the quarter, down 2 basis points sequentially. This included a 7 basis point decrease in average yields, as we saw a modest mix shift from personal loans to home and student loans, and a 3 basis point increase in cost of funds, which was mostly offset by strong growth in interest-earning assets. We continue to expect healthy net interest margins above 5% for the foreseeable future. In terms of our regulatory capital ratios, we remain very well capitalized. Our total capital ratio of 20.2% at quarter end is well above the regulatory minimum of 10.5%, as well as our additional internal stress buffer. Tangible book value grew $1.9 billion sequentially to $7.2 billion, including the benefit from the new capital raised. And tangible book value per share at quarter end is $5.97, up from $4.08 a year ago, a 46% increase. Let me now finish by providing our revised outlook for 2025. As we head into fourth quarter for the full year 2025, we now expect to add approximately 3.5 million members, which represents approximately 34% year-over-year growth, above our prior guidance of 3 million members and 30% growth. We now expect adjusted net revenue of approximately $3.54 billion, above our prior guidance of $3.375 billion. This equates to year-over-year growth of approximately 36%, an increase from our prior guide of 30%. We now expect an adjusted EBITDA of approximately $1.035 billion, above our prior guidance of $960 million. This represents a 29% margin. We now expect adjusted net income of approximately $455 million, above our prior guidance of $370 million. An adjusted EPS of approximately 37 cents, above our prior guidance of 31 cents. This equates to fourth quarter adjusted EPS of approximately 12 cents, which assumes a Q4 tax rate of approximately 10%. We now expect growth in tangible book value of approximately $2.5 billion for the year, above our prior guidance of around $640 million. We've had a great year thus far and look forward to a strong finish. Let's now begin the Q&A.
At this time, I would like to remind everyone, in order to ask a question, press star then the number 1 on your telephone keypad. Please keep in mind we'll only take one question per person at a time. Please rejoin the queue for any additional questions. And our first question comes from the line of Dan Dolev at Mizuho. Dan, please go ahead. Your line is open.
Hey, Chris, hey, Anthony. Amazing job. Very, very proud of you guys. Wanted to know, I mean, the question we're getting from investors for the past month or so is consumer credit. I mean, you guys have done incredibly well looking at NCOs coming down, but can you give us an overview of, what's going on? Maybe there's a FICO sort of differentiated thing here that helps SoFi. Just maybe an overall view of how the health of the consumer credit across the different FICO trenches would be great. And congrats again.
Sure. Thank you, Dan. The first message is our credit is performing very well. We have very strong performance by our members across each of the products, not just the performance of credit, but the spending that we see in SoFi Money, the engagement that we see in SoFi Invest, and general behavior overall. We've been in the lending business for a pretty long period of time. When I joined in 2018, one of our key priorities was focused on quality of our loans over quantity, and to make sure that those loans were durable through an economic cycle and through an interest rate cycle and any liquidity dislocations. And so we're constantly making changes to what marketing channels we're in, the trade-off between pricing and credit approvals, the unit economics of a loan. We focus on having a 40 to 50% variable profit margin on our loans. And so sometimes we can drive more volume, sometimes we can drive higher margin, but it's a constant data science opportunity for us to perfect our loans. And the strength of the consumer in our loans performance speaks for itself. It's in the numbers. You can see our net charge-offs declined, i.e. improved versus last quarter. If you go back over the last couple of years, you'll see that we've made a lot of credit changes to ensure the performance stayed high quality when we went through a 500 basis point interest increase, and now we're seeing rates come down. So we're seeing really strong trends in the channels and great demand from high quality borrowers, and we feel really confident if anything changes, we'll make the adjustments accordingly. To remind everyone, we focus on a life loan loss between 7 and 8%, and all indications are that we're below that, as Chris has mentioned in the past.
Yeah, and the only other thing I would add to Anthony's point is that we're also seeing really good demand from capital markets partners, which we view as a flight to quality. So all in all, we remain vigilant as always, but our balance sheet is strong with high quality loans, excess capital, and solid liquidity. And our partners are active and looking to expand their relationships with us. And that's a true testament to the credit that we're underwriting.
The next question comes from John Hecht from Jefferies. John, please go ahead. Your line is open.
John, you may be on mute.
John.
Sorry, guys. Apologize. Technical difficulties, but congratulations on a good quarter, and thanks for taking my questions. I guess my question is predominantly around the rate environment, decreasing rates. If you think about the forward curve, I'm wondering if you guys could talk about how the lower rate environment will affect the volume mix on the lending side, and particularly, at what point do you think there could be a pretty big spike in student loan refinance activity? And then second, unrelated, is maybe talk about what you guys expect in terms of deposit beta and what that means for NIM over the next few quarters.
Thank you, John. We've said this in the past. Our business is diverse.
not because we woke up and said we should make our business diverse, but because of our strategy of being a one-stop shop. We've scaled our businesses across the portfolio of products that we offer as being a one-stop shop to a level that in environments we can drive different businesses based on the characteristics of that environment. When rates were high, we took a specific strategy. As rates are coming down, we're taking an alternative strategy and it's working. If rates stay exactly where they are, I think our business continues to operate incredibly well. Couldn't be more optimistic about our near-term trends and what we'll do in 2026 relative to our prior long-term guidance. So I feel great about the environment we're in right now. I do worry about things like credit. I do worry about things like heightened inflation. We look at asset flows, et cetera, et cetera. So it's not like we're not worried about things. We just feel really good about the positive things versus the things that could cause a problem. As rates come down, I think our business only gets better. If we stay with unemployment below 5 to 5.5%, and inflation's at 3%, I think we're in a really great environment. I'm not a student of believing inflation should be 2%. I think 3% is perfectly fine. I think when we have global stability, that will also be important. I think about things that could disrupt us as one, economic, i.e. unemployment, two, financial liquidity, rates are coming down, not going up, and then three is the macroeconomic factors that are out of our control and exogenous events. As rates go down, our student loan business will benefit meaningfully. Rates have been very high for the last 3 years. Federal student rates are high, and we can give them a significant savings on a $70,000 balance. So we'll benefit from lower rates in student loan refinancing for sure. The home equity market, the home loan market, the real estate market more broadly will benefit from lower rates, both in refinancing as well as purchase. As it relates to refinancing, less than 5% of our members that have mortgages have them with us. So if you take everyone that's on our platform that's using SOFI and you look at the number of those people that have home loans or mortgages, only 5% of those with mortgages are with us. It's a huge opportunity for us to market lower cost of a mortgage to them. And we have the technology to know where their rates are, to deliver personalized messages to them. And we've built the back end and operational capabilities to deliver a reliable mortgage in a specific period of time. So we feel really great about that. As it relates to SoFi Money, I've said this in the past, I'll say it again, it's starting to show itself now. In a high rate environment, non-banks can compete with us on interest rate. Many choose not to because they're trying to make more money with NIM, but it's easy when rates are high, when Fed funds are high. When Fed funds is low, it's going to be really hard for non-bank and non-lending companies to compete with us. Our competitive advantage will come through and show the world that we have the highest lifetime value and a broad-based portfolio of products allows us to give a superior yield when others are struggling to provide that yield because of the fact that we have both lending and we're an insured deposit institution and we have a broad-based membership that we can market to efficiently for cross-buy. In the most recent quarter, 40% of our product growth came from cross-buy. That's with our members growing 35%. Chris, would you add anything?
Yeah, the only other thing I would add, John, to your comments on deposit betas and NIM over the next few quarters, we've been really successful in maintaining healthy NIM margins. This past quarter, we were at 5.84%. Maintaining these strong margins has been a function of the loan pricing betas that we have, as well as obviously our cost of funds. What we've demonstrated on the loan pricing betas front is in rising rate environments, we've been able to outpace rates and maintain really strong pricing. In down rate environments, we've been able to maintain solid pricing above where rates have gone. And then from an asset yield perspective, we've been able to maintain strong asset yields and reduce our overall cost of deposits, all while maintaining healthy growth in member deposits last quarter. Historically, we've been at about a 65 to 70% deposit beta. We would expect that to continue going forward.
The next question comes from Kyle Joseph from Stephens. Kyle, please go ahead. Your line is open.
Hey, good morning, guys. Thanks for taking my question. Just wanted to get your thoughts on the competitive environment. Obviously, we saw your guidance for membership growth go up, which is obviously a positive. You know, is that a function of just kind of internal marketing efforts and brand awareness, or can we step back and think about things potentially getting less competitive out there? I think you talked about capital providers and the flight to quality you're seeing. So just want to get your commentary there.
It's a function of many factors. First, unaided brand awareness. Our goal is to drive unaided brand awareness higher. It provides productivity across our digital marketing capabilities and performance marketing. And so we talked about the 9.1% unaided brand awareness that we achieved in Q3. That we expect to continue into Q4. We have a number of new product launches that will also contribute, that will not just contribute directly because they're new products, but they'll also contribute indirectly in that they're raising awareness that we're a one-stop shop. Specifically, our goal is to launch buy, sell, and hold crypto by the end of the year. We'll continue to roll out SOFI Pay to other international markets. And so the second bucket is new products. And then the third, we have a pretty good understanding of what channels to market what products in, and have a good read on customer acquisition costs by channel. And so we're just ensuring that we continue to add more marketing at an efficient rate, focused on profitability and growth. And it's our confidence in being able to do that in a bigger way in Q4 than we did in Q3, in addition to the new product launches that we'll have and the benefit from unaided brand awareness. So that's driving our confidence. I will tell you our goal is to continue to move along a linear curve to make sure that we're not falling off that efficient frontier of marketing and brand awareness and spending. But there's a lot of upside from spending at efficient rates if we chose to grow even faster.
The next question comes from Andrew Jeffrey at William Blair. Andrew, please go ahead. Your line is open.
Thank you. Appreciate you taking the question this morning. Anthony, as you see faster growth in the non-personal loans business, which I think is really encouraging from a diversification standpoint, does that change your thought on how you fund that growth on balance sheet, deposit driven versus the loan platform business? And are there opportunities in the loan platform business for non-personal loans? Just trying to think about what the funding mix looks like as the origination mix shifts a little bit.
Sure. There are definitely opportunities in the loan platform business from non-personal loans, and Chris and the capital markets team is working on that. Funding off of deposits is definitely an element that drives our durability and our confidence in lending. The dependency on deposits will likely reduce over time, and our cost of funds will also likely come down over time based on a bunch of decisions that we make as it relates to how to spend our capital. I do think you'll continue to see us drive revenue streams that are not connected to capital. 56% of our revenue is now coming from our tech platform and financial services business. And that's up pretty meaningfully over time. And you can see the benefit to our profitability line and our ROE and our tangible book value growth related to that. So there's a number of initiatives that we have that we haven't talked about publicly that will also help as we leverage blockchain technologies in the lending space specifically, that will help drive strong diversification of funding for our balance sheet.
The next question comes from Kyle Peterson at Needham & Co. Kyle, please go ahead. Your line is open.
Great. Good morning. Thanks for taking the question and nice results. Wanted to drill down into the loan platform business in particular. I know there's at least another fintech lender that kind of recently said that at least some of the loan buyers and such on from institutional investors were kind of consolidating purchases to kind of fewer platforms. I guess, was the strength this quarter, was it broad-based in terms of you guys adding participants on the platform on the funding side, or was it fairly concentrated with existing partners? Just any color there, and if you guys are seeing anything similar would be really helpful. Thank you.
Yeah, thanks, Kyle. So we saw growth across both new partners as well as existing partners who have partnerships with us. What we actually saw is a bit of a flight to quality where a number of existing partners came to us and asked to upsize their commitments, not only in Q3, but Q4. So we expect continued momentum to occur in the last quarter
of the year. And then we also saw some growth in new partners as well as expanding credit. So net, it was growth across the board.
The next question comes from Reggie Smith at JP Morgan. Reggie, please go ahead. Your line is open.
Hey guys, great quarter. I guess I had a follow up on the loan platform business as well. Is there a way to kind of frame the number of buyers on the platform and kind of what your next full quarter capacity looks like? And then also talk about the process. I think you mentioned this a second ago, Chris, about how companies upsize their commitments.
Kind of out there at the end, Reggie, but I think you asked about the process for how companies upsize their commitments. In terms of your first question about the number of buyers on the platform and what the next quarter's capacity looks like, we aren't going to disclose the number of buyers that we have. We have disclosed a few publicly with Fortress and Blue Owl, but we have a number of partners on the platform. What capacity looks like next quarter, we did $3.4 billion of originations on behalf of others this past quarter in Q3. We expect that to continue to grow heading into Q4. In terms of how companies upsize their commitments, they typically come to us intra-quarter if they have excess capacity or demand for incremental loans, and if we're able to fulfill by the end of the quarter, we'll do so.
And the behavior we're seeing of consolidation down to higher quality, we're definitely, that you mentioned, we think we're benefiting from that based on the activity we've seen from those partners.
The next question comes from Peter Christensen from Citigroup. Peter, please go ahead. Your line is open.
Thank you. Good morning. Thanks for the question and nice trends here for sure. Anthony, I was just wondering, can you remind us where we are in your investment cycle? Perhaps not just like the marketing and performance marketing, branding, those sorts of things, but maybe more so in capabilities. I know you're going to be onboarding some new clients on the tech platform pretty soon, and now building out crypto, whether that's partnered or native. Just if you could frame for us where we are in the investment cycle. Thank you.
Yeah, I would like to invest a lot more than we're investing, but we're trying to balance both growth and being responsible for delivering profitability and good returns. We don't want to go after penniless growth. And so the gating factor that we've put on and talked about publicly is to have at least a 30% incremental EBITDA margin. And I say the word at least because if the business does well relative to expectations, it's hard to spend back in a quarter. We may accelerate some hiring, but that really doesn't impact the near-term quarter. It impacts the next quarter. And we've hired a lot more people in 2025 than we set out at the beginning of the year because we've been driving both strong top-line growth and really strong incremental profitability. I would love to spend every dollar we could down to that 30% incremental EBITDA margin. It's not always possible to do that. That 30% incremental EBITDA margin will be the standard until we see our growth drop below, call it 15%. I think as long as we're growing above that, we should invest in the business to make the top line as large as it can be. And then over time, we can slow down our spending and drive margin expansion. But we're definitely not in the mode of driving margin expansion unless we outperform compared to the 30% incremental EBITDA margin. The areas we're investing in is we'll continue to iterate on our existing products. We're focused every day on 5 things of our existing products: fast, selection, content, and convenience, and then make them better together. There's some products that are new that we'll increase the investment in, such as SOFI Plus. We're really pleased with the progress we've made there. There will be additional things that we add into SOFI Plus as it relates to value, one of which is the Smart Card. We think it's the best of any card. It'll have high rewards, 5% on food. It'll also have high interest or highest APY. In addition to that, you can also build your credit score, and you'll be able to use that relationship with us to potentially borrow both ahead of time and post transactions. And that will be an evolving feature set after we launch that will continue based on how we learn our members want to use the product, but focusing on the smart things that they want and making it have the best of everything. We talked about Cash Coach on the call. There's a number of AI initiatives to help people spend less than they make and invest the rest. It is a unique formula that we can deliver on in addition to the investing piece. One of the things that's interesting about our buy, sell, and hold for crypto is that the way we'll launch this product is going to be pretty novel. Someone will open up a SoFi Money account if they don't have a SoFi Money account. They'll fund that SoFi Money account, and then all their purchases are drawn from that SoFi Money account. What's the benefit of that? Well, that SoFi Money account has FDIC insurance, and we've added additional insurance for our members if they opt in up to $2 million, not just $250,000. So someone can have an FDIC insured bank account where they keep their funds and seamlessly be able to buy cryptocurrency, and the money moves from one entity to the next seamlessly behind the scenes. A very efficient process that I think will be very differentiated and will be the first bank to offer buy, sell, and hold crypto. We've mentioned stablecoin on the call. I can just tell you every day there's a new opportunity for us to leverage the SoFi USD stablecoin that we'll plan to launch, and we have some unique advantages that we're already a tier one bank. What do I mean by that? Because we are a tier one insured deposit institution, we could take the reserves of our stablecoin and put them at the Fed and earn Fed funds. What does that mean? Zero credit risk, zero liquidity risk. There's not a stablecoin provider in the United States that can make that claim. Very differentiated, super excited about it, and there's a number of other applications there. You can imagine that Fed funds that we earn on those reserves, they can be given back to the consumer, they can be given to businesses to accept our payment at point of sale, and it can provide a lot of different benefits to other ecosystem partners that cause them to want to partner with us as opposed to a non-tier one nationally licensed bank. So we're going to invest as much as we can to that 30% incremental EBITDA margin and sustain high levels of growth until it slows down, and then we'll drive profitability.
The next question comes from Moshe Orenbuch from TD Securities. Your line is now open. Please go ahead.
Great, thanks. Maybe a little bit about the competitive dynamic in the personal loan business. Saw one of your close competitors got acquired by a large bank. Do you think that makes the business, kind of a better competitive dynamic if that happens, or maybe just talk about that a little bit? And if you could also just address, you talked about becoming more capital light. How much of that do you think comes out of the personal loan business, in terms of doing less for your balance sheet or proportionally more in the loan platform side?
In terms of competition for PL, I'd say it's generally been a competitive environment, but from entities that are not large national banks or the top 10 banks in our country, they just don't offer this product. I think there's a lot of reasons for why they don't offer this product. It's a gap in their portfolio that allows us to really gain, I think, more members at efficient costs. I think the reason why they probably don't offer the product is because they gouge people so bad on credit cards, and it's such a great ROE product that they don't want to cannibalize the credit card. The way you make money in the credit card business is through revolving balances. Well, credit cards average in the United States over 20% interest on those revolving balances. If you actually had a prime member or super prime member and told them they're going to get charged 20%, they wouldn't sign up for that any day. But if you put that behind a fancy name of the card and all these benefits and high rewards, no one sees the high interest rate that they get, and they chase those reward points thinking they're getting some benefits from it. Then they end up with a balance that they can't pay off after 1 month, and then they said they'll do it after 2 months, and before you know it, it's been 6 months. They now have a $10,000, $15,000 balance. They're paying 20 to 30% interest on it. Would you refinance them with a personal loan at 12%? Probably not. So I think this is a product that we're going to own from a leadership standpoint, and we'll continue to bite away at these huge balances where people are paying over 20% interest when they can come to us and pay 12%. Again, prime and super prime customers.
Yeah, and then what I would say on your point about being capital light and how much of it comes out of the PL business, what I would say is total personal loan originations were up 53% this past quarter, year over year, and 7% sequentially to a record of $7.5 billion. So we don't see much in terms of overall cannibalization, given our current market share, which is about 15% of total unsecured loans out there within our credit box, and that doesn't even scratch the surface of all of the outstanding credit card debt, as Anthony mentioned. So we're seeing really good momentum on the LPB side, and we're adding loans to the balance sheet at a pace that we are comfortable and happy with. This past quarter, we added about $2.7 billion of personal loans to the balance sheet, which is a good, healthy clip for us.
Our final question today comes from Devin Ryan at Citizens Financial Group. Devin, please go ahead. Your line is open.
Thanks so much. Good morning, everyone. I want to come back to the student loan opportunity. Obviously, you talked about kind of the outlook moving into a better place there with the rate environment. Can you talk a little bit about how you see some of the actions of this administration driving kind of a better environment, whether it's the big, beautiful bill? And then a few weeks ago, there was obviously headlines around the government exploring selling some of its $1.7 trillion in balances, which would seem pretty interesting for you guys. So love to get some thoughts on that. I'm not sure if you can speak to it directly, but just more broadly, if you can, just what you think that means for the market and kind of the direction of travel. Thanks.
Yeah, I think it's all very positive for SoFi. I think we benefit from all of those decisions if they get made. We look at assets from time to time that are for sale. If the government decides to sell their student loan portfolio, we'll absolutely dig into it. It'd be a great customer acquisition tool, not to mention the fact that we can make a significant profit on that portfolio of assets. As it relates to potentially reducing the amount someone can borrow in order to go to college or grad school or business school or medical school or law school, we'll be there to fill the hole. We want to help our members achieve the financial independence so they can live their ambitions. Paying for college, paying for a home is absolutely a critical decision they make. And we have to be there for all those major decisions they make. So we'll absolutely be there if they need a solution that the federal government's not providing. And that will also be a great business. Our in-school business for loans is a very profitable business. It's very attractive, and doing more of that would be even better than the student loan refinancing. It's at higher rates. It's backed by credit of another person. And people really do want to pay back the benefit that they receive from getting a college education. So that would also be an opportunity. I would say more broadly, as we think about our educational system and think about the changing needs from technology standpoint, AI, there may be new types of loans that we could get into from a student loan perspective that's outside of a 4-year type of experience that's more suited for the professional environment new graduates will enter into. So I think we'll actually see some innovation because of what the government's doing and because of the impact technology is having on hiring undergrads. Great. Thank you, operator.
Back to you.
Thank you, operator. Sorry about that. As you can see, it was an eventful quarter at SoFi, and we are energized as we wrap up 2025 and head into 2026. Today's results reflect the durability of the foundation our team has been tirelessly building over the last 8 years. If it was not clear before today, I think it's safe to say that our results demonstrate that we truly have become a one-stop shop for all your financial needs, all in one digital platform. Many others have talked about achieving this strategy, but to date, no one else has come close to the breadth of products or complexity of operations that we have, not to mention the revenue scale we have, the profitability we're generating, and the durability and broad diversification of revenue across our portfolio of products. This success positions us the best to benefit from the two tech super cycles unfolding and the continued strong sector transition globally from traditional finance companies to fintech companies. Suffice it to say, I'm more confident than ever that our strategy and our execution will continue to deliver our sustainable competitive advantage with the highest lifetime value, and we'll accelerate our investment to ensure we maintain our lead. Along the way, we will remain guided by the SoFi way. We are all operating as founders, problem solvers, and partners to bring the best products and services to our members so we can have a meaningful impact on their lives and lead them to a better, more secure financial future. By acting in the best interest of our members, we will build deeper relationships across our one-stop shop platform that will lead to durable growth and strong returns for our shareholders for decades to come. Thank you for joining our call, and we look forward to talking to you next quarter.
Boom. What do you guys think?
The horses are looking fresh. I like that.
I really liked the note on the low platform business. That was a standout comment to me of acceleration.
Which one?
Partners going to Noto and saying, "Hey, we want to expand the deal," and seeing acceleration into Q4. That's the key part of the bull thesis. So,
yeah, a huge theme of that call was the flight to quality. They probably said it like 6, 7, 8, 9 times, where they said, we're seeing a flight to quality for the demand for our loans, and that their existing partners are expanding. They expanded in Q3. They've already seen more expansion inside of Q4, where they've come to them and said, "Hey, we want more originations. We want more volume." So yeah, that flight to quality, I think, was, if there was one phrase that you'd pick out as kind of the theme of that call, it would definitely be that one.
Yeah, I noticed that too, and it's a great way to say what SoFi offers. I think that sums up, how potentially institutions are looking at them: a flight to quality. And the gain on sale margins for home loans and personal loans looked really good this quarter
Even
as well.
student loans, it was 105.9, which is great. That's the first time they've sold student loans in years. I don't remember the last time we got a student loan sale. It was 377 million in this quarter, which is, that's a decent amount. And I'm glad that they did that, so that you can also justify kind of the gain on sale margins and the fair values there, because it's been a long time since they did that.
It's interesting that when you were looking at the stock chart and the earnings call, like the biggest pump was on the Southwest news. But I found the most interesting piece here was really what they were saying on the stablecoins, and how, like, reading between the lines of their expansions into blockchain over the coming quarters, and specifically the advantage that he was highlighting with regards to stablecoins that they have. I think a lot of people, I think that fell, it went over a lot of people's heads, but that's really going to be a big area that they're going to focus in, and they're just giving you the playbook.
Yeah, there were a couple things there that I was a little confused by, and Roy, maybe you can help me a little bit. But he said that, they're going to potentially have this stable coin custody those deposits and then offer rewards back to the customer.
Here, I'm sharing it.
They can't do that.
You can't offer interest. You can offer rewards.
This could be back to like the 70s and 80s, when banks would offer like free toaster for signing up, just because they were limited by regulation on what they could offer. So it could be a reward of a different type. Also, with a couple of the acts that are out there, they need to be signed into law, but it could be that in the future they can't offer yield. So Noto could be signaling either or.
It was an interesting point he made about liquidity, right? Because most stablecoins are going back and buying treasuries. But since SoFi is a bank, they can just use the Fed overnight fund rate, right? They can just put it in Fed deposits. And so they get instant liquidity. That is a little bit of a differentiation, right? That others can't have.
What is this? The result of the charter, right, Chris? Like, nobody else can.
Yeah, it's because of the charter.
Yeah, okay.
What is this journey that PayPal is going on, Roy? What the heck is happening?
I don't know. I'm guessing, part of it, is it was up too fast. Whenever something pops like that, there's always a little consolidation. But I didn't pay attention to the earnings call at all. I can't, read that and then listen to this. It just doesn't work. So
probably just a bad call. If it was guidance or something, it would have dumped sooner. So it's just a bad call, probably.
Well, you know what's funny too is SoFi. I knew that this was going to happen. Anthony Noto started going off about how he's always worried about credit, and I was just like, "Oh man, I know that the transcript is just going to pick up." And then the stock started falling, and I was like, "Dude, stop talking about this." We're aware you have full view of the company. This looks not good.
Well, it's always what he should say is it's always a focus to have great credit quality. Instead of he's worried about the way he phrased it was an issue. What do you guys think about the smart card?
It's really good timing. I mentioned this, that the SNAP benefits, if the shutdown continues November 1st, they go away. So if this is something that persists, food is already expensive and it's a challenge and it's a big category for a lot of people. That's going to be a driver for the card. We'll have to see what the unit economics look like, but Noto is throwing shots out there, so I don't think that they're looking at this as a loss leader.
Okay, breaking news really quick. Microsoft agrees to new terms with OpenAI worth $135 billion stake in the business, representing about 27% ownership on an as converted diluted basis. So
that's crazy because they're not a for-profit company, right?
I know, right?
It's just
Closed
like,
AI now.
if you want to pump your stock, just mention OpenAI or any collaboration with OpenAI at all. It's
what's Microsoft doing right now? Up 3.5%. It is it's working. It's working.
Yeah,
And then surprisingly, the other company that mentioned an OpenAI deal today, PayPal. Two very different names. But yeah. And then SoFi, no OpenAI deal, up 3.3% right now, 3101. Felt a lot cooler at 3165, but we'll have to see. I mean, I'm here till market opens.
And then we did get confirmation of the Southwest rewards debit card, which we already seen.
Yeah, but not the other one. Not
No,
United.
Yeah, they didn't talk about United at all.
So maybe not as far along in that deal. But then there was other comments. He went on this streak that actually brought us to all-time highs where he just started listing off. I need to get the transcript up, but he just started listing off everything that they were doing, huge deals that they were closing, loan platform business, all within like a 5-minute period as he wrapped up his monologue at the end. And the stock was hitting new highs. What was the other technology platform comment that he made? He talked about multiple other deals or something.
he said the biggest deal. Hold on, I have it here. I had the whole transcript basically, but yeah, he said like the biggest deals are yet to come. Just give me 1 second, I'll find it.
He also, while you bring that up, Tevis, Chris Lapointe said a number of existing loan platform business partners came to us and asked to upsize their commitments, not only in Q3, but Q4. So we expect continued momentum to occur in the last quarter of the year. So is he expecting more than $3.4 billion of originations in Q4?
For the LPB? Yeah, I mean, I can't see any other way to interpret those comments.
Yeah, so this is a direct quote. Newest partnership with one of the largest airlines, Southwest Airlines, and I think this is what you're talking about, Tanner. We also signed on 2 major consumer brands. Our largest, I think this is just AI going wrong, which will be announced in due course, or our largest yet.
Yeah, our largest yet.
The partnerships are a reflection of the strong and growing demand, our market-leading technology to power embedded financial products. So largest consumer brands that's going to be announced in due course. So that to me reads as we're going to drop the logos.
But you know what I realized though is I think a lot of people were very concerned about Galileo whenever they were dealing with other banks, because why would one company's technology stack want to be built by their competitors? That is always going to be a concern. But these airlines and consumer brands love the fact that SoFi is this very high-tech fintech that's also offering them their tech. There will be not zero churn. Who knows what's going to happen? But I don't think that that's going to be a concern of them. And many of them will go to Galileo because they are a bank, not the other way around. Mm-hmm. So this is a good, angle for the company to go in, and gives me a lot of reason to believe that Galileo can pick up growth again.
Well, yeah, I mean, Q1 26 is what they're having us focus on for reacceleration and growth, and it kind of tracks.
Yeah.
And they have that big one-time hit to positively from Chime exiting earlier. I think it was $18 million, which will look nice for quarter one. Chime is continuing to churn off the debit card stuff, so there is some churn there, and I wouldn't expect too much as far as the revenue side, for the next quarter or two. But they're onboarding a lot of good clients. The Southwest one, I'm kind of curious if if the other deal, maybe it's not just that it's not further along, but that they know that Southwest is really going to use this partnership versus airlines still are very attracted at selling their own credit cards more so than debit cards. So maybe that's the direction with United. It's a nice addition to them, but they're not going to emphasize it.
Yeah, and keep in mind when they say like, "Hey, we're going to announce these," like these are closed deals. It's not like they're in the closing stages or they're in the POC integration. Like these deals have been closed for a while, and you have to keep in mind that the life cycle of closing this deal is like they know years in advance basically what they're going to be announcing. So even though they might have some logos, they would sit on them until they announce them. So even for Q1 26, I would imagine that those deals are already done and they're just going to be announced in Q1 once the ramp up starts.
Yeah.
We're all confused.
I love that comment. But
before you chime in there real quick, I need to sign off. I need to go to my first meeting here, but it's good covering this with you guys. Go SoFi.
Thanks for joining us, Roy. Appreciate you. So I was just going to state, I don't even remember now. Blame this on Roy. What were you talking about just a second ago, Tevis?
The Galileo deal is being closed ahead of time.
I remember what I was going to talk about. Not that at all. The smart card. The smart card. It does seem like, once again, another product that just requires you to have multiple products. We used to saw a lot of job offerings before, maybe a couple quarters ago, that said like, SoFi money and credit card, and these sort of integrated job offerings for both businesses. Now it seems like the smart card is not just 5% cash back on food. I mean, obviously that's what caught all of our eyes because we were thinking that it was going to be a 5% cashback card. But what he actually says is that it's a SoFi Plus offering. The card will offer 5% cashback on food, our highest interest rate on deposits, credit builder capabilities, borrowing capabilities, and so much more.
I'm going to guess that, like, I wonder if it's going to be a secured card, right? Like, if that's what the borrowing capabilities are, is some sort of secured card where you've got, and you're able to get a certain amount of APY, and it's a bonus APY if you use it with the card. And that falls in line with all those things, because a secured card would build your credit. It would allow you to have borrowing associated with it. And you could get, like, giving 5% rewards would make more sense because interchange on credit's just higher. So anyway, I'm just postulating.
If I could double on that, the type of customer, like, giving 5% cash back on food, that's like Tevis' smallest expense, like if he's out there spending it on, condos and boats and all of these things, he wants 3% cash back on everything. So food's like his lowest expense, rich guy. But for the people who might need a secured card, food could probably be up there on some of their discretionary spend. So it would actually be the most important segment of spend for them.
Yeah,
but for Tevis, it's not even remotely close. Tevis, would you use the smart card?
Sorry, somebody said Noto was on CNBC again, so I was just checking. I wasn't listening to you at all.
Okay.
I would use it.
What a way to preface that.
I would use it for food. I think 5% on like, I think that's going to be the hook, right? Like, and even if that is like an APY advantage that they can offer over others, or even if it is a loss leader, like it makes a big statement to hook people in. And I mean, he was saying that they're 40% of new products were as a result of cross-sell, in spite of members growing 35%. So that just speaks to a really strong cross-selling ability. And yes, I'm looking at CBC just to see if he's going to pop up. But that strong cross-selling ability affords them loss leaders in their ecosystem, just so that they can get people into that, and especially with SoFi Plus as the underlying base of it all.
Yeah. Okay, if you have CNBC, let me know whenever he comes up and just throw it on screen.
It's just commercials. I'll throw it up if he pops up.
Cool.
I will have to take off just after market open, just kind of FYI.
Yeah, we won't stay too, or I'm not expecting to stay too long after market open. Maybe.
Yeah, we got jobs, Tanner. Okay, I know you are not doing, like, you're just sitting at home talking to your computer. The rest of us are sitting at home talking to our computer.
Yeah, I'm not ashamed of it at all. It's you know, it's the best life I could have possibly asked for. Yeah, the problem is too, if it is a secured card with 5% cashback, so Wealth Simple had this one time where they offered 5% cashback on weekends. That was the deal. Okay. And then what they found out is that people had two cards and then they just use Wealth Simple on the weekends and then nothing else, or never use it again for any other purchase.
Yeah, of course.
And eventually they canceled it within like 6 months.
Yeah, same's going to happen with SoFi, right? Like they're just going to use it for groceries or whatever. But
yeah, just for food. And then, yeah, we'll see. We'll see.
I mean, that's what I'll do, honestly. I've got the Robinhood Gold card, so I'll use that for 3% back on everything. And then when we go buy food, I'll use my SoFi Smart Card.
If it's a really good card, it's going to include Uber and all those things for 5% as well. Okay.
Yeah, it'd be cool. We'll see.
The market's going to open in 10 minutes. The volume that we're seeing right now is peanuts. Absolute scraps. Okay. By the way, Chris, you were right. It was 2.7 million. I wasn't reading it properly. That said, go ahead.
Is this right? No, that's yesterday's total volume. Sorry. I was reading that there was 82 million shares, but it was just yesterday's volume.
No, there's probably been like 4 million. Well, since 8 o'clock. But yeah. Will they upload their transcript eventually? But usually you can find that on another platform. If you have Quarter, it's already up.
Fiscal AI probably has it pretty.
I'm checking that right now. Yeah. Fiscal AI has it up right now. So, I mean, you can go to Fiscal AI/future and then get that.
Or /data de-investing.
You got one?
Yeah, I've got one.
All right, that's sick. Yeah, it's already up. Okay. What's it called? What else did you notice from the call or earnings?
I did think that the last question about student loans was actually a really good question, about how kind of they expect to and the call generally. I think this quarter generally, like, we had high expectations. I think they met all my expectations. I feel like this has now become like 2 years ago. Every single quarter was was so terrifying because people were just waiting for the other shoe for a shoe to drop, and it never did. And now it's just like, yeah, we're just compounding and the business is running great and everything's going well and like things are positive. And so I don't know. It's just for me, at least, it's really like I hold now an outsized amount of SoFi in my portfolio. And I just feel really comfortable holding it. Like, it doesn't bother me at all.
Really quick about this Microsoft OpenAI deal. This is the weirdest deal I've seen.
Oh no.
Essentially, Microsoft has IP rights for both the models and products for OpenAI until they hit AGI. Okay? What? Until OpenAI declares that they have, gotten to AGI. Now, if they do that before 2032, but that has to be verified by an independent expert panel to determine whether or not OpenAI has, like, what world are we living in? Microsoft's IP rights now exclude OpenAI's consumer hardware. Interesting. Okay, so think Johnny Ives partnerships potentially. OpenAI has contracted to purchase an additional $250 billion of Azure services. The revenue share agreement remains, until the panel verifies AGI through payments that will be made over a longer period of time. Like, this is the weirdest deal I've ever seen.
I swear they just do it to pump now. Like, it's just, I'm so desensitized to all these OpenAI deals, man. Every week we get a new one.
I know, and they're all hundreds of billions of dollars. So let's see where NVIDIA is. By the way, GTC for NVIDIA is at noon. So after 9:30, whenever we see the market open, get your coffee, whatever, and then we're back at noon. NVIDIA GTC here. Jensen Huang, tell us about the future of artificial intelligence, potentially why, ChatGPT has been doing so many deals. 5 minutes till the market opens. 5 minutes. B-Dubs thinks that SOFI at the end of the day will be at a higher increase in share price than PayPal. Any predictions there?
I think PayPal will probably, because of that OpenAI. They said SoFi did not say OpenAI, and PayPal did say OpenAI, and therefore PayPal stock will go higher on the day.
One said OpenAI. That's funny. SoFi is falling into the close, still 5 minutes away, 2.6%. But like I said, this is on peanuts worth of volume.
Yeah, I'm not worried. Like, even if it falls, that's the thing. Like, if it falls to 29, 28, 27, 26, like, it doesn't bother me. Like, I'm not concerned in the slightest. And if it goes to like 35, it really doesn't. I mean, we're in an area where I bought yesterday, so I still think that we're going much higher in the long term from here. And so, like, what it does in the short term doesn't matter to me as much.
That's fair. That's fair.
They're talking about the Microsoft deal. You want me to put up?
Sure. Yes, please. Sorry.
These other investors, the OpenAI Foundation. So they were 32.5% until a recent round, but they're at 27%, and that is being valued at $135 billion from Microsoft. By the way, just did quick math in terms of what that is. That would value overall OpenAI at about $548 billion. They say the agreement preserves key elements that have fueled the successful partnership between OpenAI and Microsoft. Of course, remember, Microsoft was the money behind helping them create the frontier models and so many of the things that they did in the earliest days. Since then, as we know, OpenAI has gone everywhere to raise money. SoftBank has become a very important supporter. They have deals with, NVIDIA, potentially as much as $100 billion, and then so much else. Once AGI is declared by OpenAI, they say the declaration will now be verified by an independent expert panel. Microsoft's IP rights for both models and products are extended through 2032, now include models post artificial general intelligence, what they say are safety guardrails as well. Remember, when they reached AGI previously, the IP was going to revert back to OpenAI. So now they've got it till 2032. I'm reading through a number of other things here as well. For its part, the nonprofit, now called the OpenAI Foundation, Jim, will currently hold equity in the for-profit valued at about $130 billion. So it immediately becomes one of the best resource philanthropic organizations in the world. Absolutely. Now, one of the key questions is, does this put OpenAI in a path to potentially one day go public?
Yes, I think it does. I think because there are a lot of people who are saying, listen, unless there's some clarity this quarter about what Microsoft really owns and doesn't own, then maybe this whole thing is just too murky. Now I think they really, ahead of the quarter, explained a lot. Now, David, this $250 billion of Azure services that OpenAI is contracted with, this is incremental. Well, people say, oh, I see, they own, Microsoft owns this, and then they get the money back. I mean, this circular deal, I don't think is true. I think this is a big win for Microsoft. I also think it's big because Google didn't get this, and now people are going to say Amazon Web Services is behind again. So it is very interesting, the $250 billion that they've got.
Yeah. You're right. Purchase an incremental $250 billion of Azure services. Yes, without a doubt. Very important part of this. Carl, going through it, again, the release here to share some of the more important parts. Obviously, we've been waiting for this. I do want to point out there is still that lawsuit out there from XAI and Elon Musk that is challenging the ability of the company to do this restructuring. If in fact they were successful in pursuing that litigation and a judge agreed and said you can't do this, it would throw into chaos much of what's been done. So just for people to be aware,
yes,
that's still out there.
Kind of like SCOTUS and tariffs. You just the huge binary unknown.
Right.
The other big news regarding at least chat is PayPal today becoming the first wallet to work in agentic commerce.
He introduced us to Alex Chris.
Well, I'd like to hear about that. The market is opening right now. Let's see. Volume is coming in.
They don't want to hear the CNBC bell?
Nope. I want to see SOFI. Ding, 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 ding. Okay. Looking good so far, ladies and gentlemen. This is an all-time historic high on SOFI, 3140 right now for real market hours. I think our price predictions for end of day was Tevis at 3150, right? Mine was 3151. Had nothing to do with what Tevis said. Chris was, I don't remember.
I think Roy had 33 and I had 3301.
Yes, maybe I got the idea from you. Seeing some red candles. Let's see what ends up happening today. Where is PayPal opening as well? Up 7.6%. TeraWolf up 10%. Hyperscaler data up 31% today. Upwork up 7%. Wonder what's going on with Upwork. Beyond Meat up 7%. Going back to SoFi here, up 2%. Red candles on the day as we open. $30.40 now. Come on, SoFi. Let's find some buyers. This is the best quarter we've ever seen in history. What are your guys?
What it wants. That's okay.
Nvidia pump. Sorry. I'll go back to SoFi.
No, you're good. Wait, does Tevis hold Nvidia, or is it? He doesn't, right? That's the one holdover.
I might get back in. I'm not sure.
It's good to buy at 200, not at like 170. Whenever you had the option to use them. What? It will be.
It's crazy.
Okay, man. I can't believe these red candles.
I mean,
are we going to break under $30 on earnings?
The market as a whole is kind of reddish this morning, but give it time.
Remember last year when was it? It was last year, right? When last year Q3 they announced the LPB deal, and then it like sold off after it opened, and we were all just super confused.
The Nasdaq or the markets as a whole are red. Everything's green.
Yeah, last year it was when they announced the LPB, and on the day it was down 6%. And we were all like, what is going on?
Okay.
Come on. It seems to be holding $30, which is pretty good.
Yes. Yeah. PayPal.
It's still an all-time high. I mean, we can't complain that loud.
PayPal up 7.5%. At one point, getting back down to $73. I mean, what a ride! Going from 70 to 82, back to 75. Such an interesting name, PayPal.
I think PayPal, at a bare minimum, should be at $100 a share. Like, I don't understand what the market is doing with that with PayPal. It doesn't make sense to me.
So many job cuts. UPS with massive job cuts. Did you see this?
No, I didn't.
Amazon with massive job cuts. Like, it's just, I don't know, man. It makes me want to go more risk off. We've had a great freaking year. Yeah, UPS just like massive. And they're up 10%. Amazon, of course, should be up today too after announcing job cuts.
But do you think that's slowing of economy, or do you think that that's, them being...
Well, so Jassy basically said that we just need fewer roles because a lot of it is just AI now.
Yeah.
Which is crazy because if it was the economy or like interest rates rising or whatever, like those jobs are gonna, like, it's cyclical, right? Those jobs would come back. But if it's just displacement, then it's like, well, your SOL, nothing to do there because AI is just going to replace those jobs, which is scarier. I mean, not if you're a holder of Amazon, but for the underlying economy, like there has to be this balancing act between the robots replacing everything and increasing operating efficiency for the company versus the actual consumer having enough purchasing power to prop up the company's revenues.
Yeah.
If you fire everybody, nobody has money to buy shit. Therefore, your stock is going to fall because your fundamentals are going to fall.
BMNR is down 1%. Ethereum up 0.4%. PayPal recovering here 8.5%. And SoFi just breaking, holding this $30 line. Come on. Looks like we might be breaking through.
This is why we end our live stream at 9:30 because this is always what happens.
That's not that's not true. Last time we were up like 15%. Me and Chris were the only ones on live.
Yeah,
it was nothing but green candles.
And then what happened at 10 a.m.? It freaking dumped.
The only thing that's changed is that you're here, Tevis, and now I'm seeing red candles. Okay, I don't know. Did you just write cash secured puts or something?
I'm filming on my phone, so I literally can't. I need to write covered calls, guys, so they can go back up. But I got to do that after I get off this call.
I did actually write some cover calls for on my leaps that were expiring in January anyway. So I wrote them at 36 because I was like, a 20% move's a pretty big move for SoFi. I don't expect that. So those are looking pretty good. And I did have some cash secured puts that expire on Friday that are now up. Well, let's see. I sold them at the beginning of the month, but they're up 94% right now. So those will close out. I'm sure those will close out of the money too. So
yeah. Okay. I wish during this time, well, I mean, SoFi, we did end up seeing an all-time high, but I wish I could also see an all-time high for NVIDIA as well. That would be a lot of fun, but maybe I'll have to wait a little longer. Are we good to wrap there?
Yeah, I got to get changed and get to a meeting. So,
ladies and gentlemen, thank you all so much for watching. Really do appreciate it. We'll continue to follow SoFi, and hopefully they recover throughout the day, especially whenever we end the stream.
Nobody post a screenshot. You understand, Chris?
I already did. It's too late. It's too late.
He did. That's why we're going down.
Everybody blame Chris. He is the reason that SoFi is down.
But thank you all so much for watching. Really do appreciate your time. And bye for now.